Fala galera, muito boa noite! Boa noite, boa noite, boa noite! Sejam todos bem-vindos aí ao nosso canal do YouTube! Hoje aí com vocês o Forex! Nesta noite de domingo, dia 3 de novembro, sejam todos bem-vindos aí para mais um episódio aí do Forex. É isso aí, galera. Pessoal, venda tá no ouro assim que abrir e compra no Dow. Apesar que o Dow já tá bem esticado aí, mas Dow vai subir aí, tá, pessoal? Vai dar uma estourada boa. Ele tá bem esticado, né? Vai esticar mais ainda. Não só por conta da notícia aí do shake aí, né? Mas tá nas máximas. Pode ver que é a máxima histórica que ele tá batendo aí. Então pra mim ele deve subir mais. Deve sair dessa região aqui de consolidação e vai esticar. Ele vai partir para outra região, tá, pessoal? Ele vai fazer novas máximas aí, tá? Vai sair desse rosca aqui e vai fazer novas máximas aí, tá bom? Essa é a leitura aí para hoje, tá? Ok, pessoal? O Dow deve subir bastante aí ainda. Vai para cima o Dow. Na hora que abrir aí, a gente vai vender o ouro e comprar o Dow. Deixa o Dow esperar um pouco, não abre logo na abertura não, porque eles podem abrir e dar uma cacetada e vir pra cá. Mas compra aqui no 300, tá, pessoal? Se ele vier aqui pro 300 aqui, ó, nessa região, o Dow, ó, no 300, bem aqui embaixo, compra, tá? Boa noite, Camila. Boa noite, Takuma. Vai abrir aí, pessoal. Não abriu não? Então hoje deve abrir outro horário. Ai, ai. Mudou, né? Esqueci. Mudou o horário, cara. Então o tal do horário de inverno, né? Agora é mais tarde. Bom, o pau que tá rolando, pessoal, é do petróleo lá. Tá da transação trilionária lá. Trilhões. Tá legal? E aí por isso que o mercado deve subir aí. Além dessa informação aí. Deixa eu ver que horários começa esse... horas. Então, nós estamos adiantado. Lá atrasou, né? Então vai começar daqui 1 hora, 20 horas. É isso? Galera, vai começar aí às 20 horas, tá? Então o Forex hoje começa às 20 horas, devido à mudança do horário. Tá bom? É isso aí, galera. Pessoal, eu vou deixar a tela aí. Eu tenho um compromisso, né, com a igreja hoje, Santa Ceia. E aí eu só vou voltar às 9 horas da noite. E aí já deve ter aberto o pregão, o Forex, às 8 horas. Mas assim que abrir, pessoal, compra no Dow e venda no ouro, tá bom? Vou deixar bem escrito aqui. lá. Aliás, compra no ouro não, venda no ouro assim que abrir e compra no Dow. A mercado mesmo, tá, pessoal? Assim que abrir o mercado, compra no ouro, tá? O ouro pode vender o ouro a mercado e comprar o Dow a mercado, tá? Deve subir bastante aí. Beleza? Aí eu volto mais tarde, tá, galera? Enquanto isso eu vou deixar aí pra vocês aí o Bloomberg, tá?
Stock markets pumped. He often talks about how high or how this is boosting the stock market. So, that's a really big motivation, I think, for Washington.
One of those erratic actions or inaction from the Trump administration was the sales of components to Huawei. President Trump has said back in June that he would be allowing the sale of these components. Do we have an update on that front?
Well, I think that it sounds like the component sales will go ahead per what Wilbur Ross said to us in Bangkok overnight. But once again, looking for really, don't assume that it's all done until we see some kind of announcement. And the other big thing that we kind of got today is just the question of where to sign the deal. And I think the irony of the situation is that the US and China had a neutral location, Chile, and they had a hard date, which was the APEC meeting, November 16, 17. That meeting's now been cancelled. So there's so much symbolism about the signing and the getting together of Trump and China's President Xi that it's a very big moment for political theater that's very appealing to the US president. Trump said today he thinks that the deal should be signed in the US. Wilbur Ross suggested that China was another option. So not having that neutral location, I think, could be yet another stumbling block.
Yeah, and of course we know one of the proposed possibilities are is somewhere that Xi Jinping is fond of as well. In terms of this being the phase one of this deal, do we have any more certainty as to whether phase two or even three, whether those talks will be ongoing as well?
Well, it would be good to think that phase one could be signed and then kind of lather, rinse and repeat, get back in there and work on some of the very bigger and structural issues between the US and China. But Chinese officials indicated late last week that they don't know that they can get that kind of deal signed with the Trump administration. So I think there's certainly no guarantee of that. President Trump has said that he thinks China would like to wait for a Democratic administration, which he doesn't think is going to happen. So no guarantee that there'll be sort of smooth sailing to phase two or phase three. I think because some of the reforms that the US would like to see from China are just elements that Beijing is not going to give up on very easily.
Yeah, but really difficult kind of structural issues there as well. Roz, thank you so much for that. Roz Krasny there in DC with the latest on trade, and of course we'll be hearing more in our exclusive conversation with the US Commerce Secretary Wilbur Ross later on. You can catch more of our interviews at the ASEAN Summit taking place in Bangkok, including Michael Mishlak of the US ASEAN Business Council and the US Chamber of Commerce Senior VP for Asia, Charles Freeman. joining us. Well, still ahead, Fed Vice Chairman Richard Clarida says monetary policy and the US economy are, quote, in a good place. We'll get more on what the Fed officials are saying later.
But up next, Ghana's Steve Glass says watch out for bond market bubble and why QE is causing huge social issues. This is Bloomberg.
Paddy Stradwatts in Sydney.
And I'm Sharian in New York. You're watching Daybreak Australia. Big events this week in focus will be the BOE rate decision as well as OPEC's oil outlook. Also, investors on Wall Street will continue to digest earnings. Financial giants such as Berkshire Hathaway, SoftBank, and Prudential will be among the companies reporting. Sue Keenan has our look ahead. Sue, so what are you watching?
Well, very big week for earnings. 82 S&P 500 companies, so it's the last big hurrah for the heavy earnings week. Of course, we've got all these different events with the Bank of England, as we announced. Also, the Reserve Bank of Australia setting interest rates. Chinese President Xi delivering a keynote in Shanghai. And we've got the Treasury Secretary Mnuchin visiting Qatar. But check out the snapshot. Notice the transportation index was very strong on Friday. We were up with a big bang on that strong job report. But let's take a look into the Bloomberg, if we will, at the dollar. It closed the month with the worst monthly decline since January 2013. So that is a trend that many are watching. In terms of the earnings that are be coming at us, very big names on the financial front. We've got Berkshire Hathaway, Prudential, SoftBank, and Brookfield Property among big names to watch.
Yeah, and so we mentioned this was really a peak week for earnings. Give us a preview, I guess, of some of the big tech names. Auto, of course, retailers are also reporting.
Yeah, and so we really cover the spectrum of several big industry groups with very big names that have been in the news. Baidu, Qualcomm, again, we're very interested to see how the chip stocks have been doing, particularly in respect to the trade issues. And then take a look at some of the very big names, Disney in media, Uber, which is not only in the auto industry, but a recent IPO, very interesting, and that the stock has gotten a very big pop on recent positive news on production. Under Armour and Adidas in the retail space that are being watched closely for spending trends. Those are also likely to set the tone for trading.
All right, Sue Keenan there with a wrap of the action as well as a look ahead on what to expect this week. Joining us now for more On the markets is Pengana International Equities Deputy Portfolio Manager Stephen Glass here in Sydney. Stephen, happy Monday. Great to have you. Let me start off by throwing up this chart looking at another fresh record high for the S&P 500 on Friday, largely on that really good jobs report. But I'm wondering, given that the macro picture globally continues to deteriorate, we had the South Korean exports, another horrible month for something like an 11th straight month. Is this really justified? I know that you're sort of moderately more positive on equities than anything else.
Yeah, no, I'm very positive on equities relative to debt. There's no doubt that equities look a lot better value to us. Look, this has been probably one of the most hated bull markets in history. There's been net outflows out of equity funds for the past 3 quarters. All the money's going into credit, so we can't say that there's a whole lot of optimism around equities at the moment. Is this move justified? It probably is justified given where interest rates are, given the backdrop for where money will need to go. And we think there's a lot of reasons to really look at equities going forward. Just to give you a brief, an anecdotal piece of evidence, GE's current, for its pension assets are assuming something like 6.75% return over the next 20 years. There's no way they can achieve that using debt, if you get 2% interest rates on debt. So pension funds are going to have to allocate more to equities going forward, and that is a very good backdrop for equities in our opinion.
Is there a reasonable level of concern that you hold over corporate debt, even investment grade?
I've got a huge concern around corporate debt, and really my main concern is in the triple Bs, the lowest quality or the lowest rating of the investment grade debt. That has just absolutely ballooned. It is now 60% of the entire investment grade market, and it won't take much for those stocks to get downgraded. Their leverage is now 3 times, the average leverage for triple Bs is 3 times EBITDA, or over 3 times, which is at extreme levels. And you would think if there's a rating downgrade and some of those move into junk status, a lot of people will be forced to sell. So we think that if there is a bubble and if there are reasons to be concerned, it really is in the debt market, and we see a lot of it in the triple B area, and we also see it in negative yielding debt, which is obviously guaranteeing a loss if held to maturity. So yeah, our concerns are in the debt market.
Will fiscal stimulus come to the rescue?
I think we're going to have to. This monetary policy really hasn't worked as it should, in our opinion, and it's created a whole lot of imbalances around the world. And last time I was actually here, I mentioned about the social problems it's creating around the world. So what we've had with monetary policy and near zero or zero interest rates is we've just had asset price inflation, so the rich have got richer. Real wages haven't kept up, so most people have gone backwards over the past 10 years. And that's why we've had things like in Chile where people protested about a 4% increase in public transportation fees. It's why we've had Brexit, Trump, North League in Italy, Yellow Vests in France, and I could reel off even more examples. And we see the current monetary policy creating huge social issues, which is going to have some overflow for the real economy in time. So we think fiscal stimulus is going to have to come, and we think it will be a very good thing. And that's why at Pengana International we're starting to look more at industrials and cyclicals, which have been neglected by the market up to now.
Given all of the uncertainty globally, it's not surprising that we are seeing this huge gold rally. This GTV chart on the Bloomberg showing you that ETF holdings of gold are now near all-time highs. So given the run-up so far, does this still have room to rally?
We think it does. There's a lot of risks building in the world, and we think gold provides a nice hedge. Paper money has lost its worth, in our opinion, in the zero, or its worth has declined, I should say, in the near zero interest rates world. We think central banks have been issuing way too much cash, and we think gold provides a nice hedge. So we certainly think people should hold some gold in their portfolio, and at the end of the day, it should be thought of primarily as a risk hedge, and there are a lot of risks out there.
Is QE a reasonable expectation for the RBA, and will it be meaningful given the nature of this market?
The RBA really don't want to do that. They've been pretty clear that they think that the Australia needs fiscal stimulus rather than more of their monetary stimulus. It's hard to say where they will go. I think they probably will cut rates, but I don't think QE is realistic. I don't think we need it. And so I don't think it's something that the RBA will, and I don't think it's something the RBA wants to pursue, so I don't think it will happen.
Yeah, you've written in your notes about the kind of flow-on impact of QE monetary policy globally, and you think that's one of the reasons why we're seeing sort of mass protests across large parts of the world. Is that sort of geopolitical, I guess, disruption or tension something that we're not calculating enough when we look at growth in markets?
I think people have it in the back of their mind, and you would see...
it's quite sort of generational and existential, doesn't it?
It is, and it's a very prescient time, because obviously we're in a more connected world, so we're more aware of all these issues, and we are starting to see people become more vocal. But I do think the market's aware of it, but the market can be very myopic. So, for instance, we see the protests in Hong Kong, and the Hong Kong market might weaken a bit. But people tend to just think about it here and now. But if we look really long term, this is going to have real impacts. And what we think could happen is it creates wage pressure. For too long, Labor has actually been losing out to corporate profits, and we do think that there is a case for wages to go up, and that's going to be very inflationary, and therefore you want to be in things that create good inflation hedges. So all this money that's flown into debt right now, and there's been massive inflows into bond funds, all of it I think is taking huge risks, in my opinion, and it just takes a little bit of a change for that to result in pretty big impacts, and I think that's where the real danger is.
What about the danger of increased regulation? Because you say in your notes that you actually like U.S. health insurers. We're going into the 2020 elections. What are the risks of having more scrutiny in this sector?
Look, the health insurers have been hit very hard, because basically we've had Warren and and Bernie Sanders saying they want Medicare for all, and we just think that is an unreasonable expectation. First of all, for it to happen, they would have to win the Democrat nominee, then the Democrats would have to win the lower house, then they also have to get it past the Senate, then they actually will have to get it through the legal cases that are sure to follow, and at the end of the day, it just doesn't make economic sense. How can we have Medicare for all if we can't even fund Medicare for some? So these health insurers have been hit hard. They're very cheap, in our opinion, 10 times PE. They continue to grow. They're very good businesses. They benefit from network effects, and they are loved because people are just reacting to headlines. But we think the headlines are unrealistic, and we think there's a lot of money to be made there. So we own Cigna and we own United Health.
Stephen Glass, great to have your thoughts. Thank you. Pengana International Equities Deputy Portfolio Manager. Just ahead, Aramco kicks off what could be the biggest share sale in history, but the company may not be worth as much as Riyadh hopes. This is Bloomberg.
Our top stories this morning in D.C. and Dow in the S&P.
We saw the euro on a 7-day
Sizable moves in the currency market, which is down half.
We begin in the oil patch. Saudi Arabia has oil.
Pretty much unchanged.
Welcome to Bloomberg, the first Court Asia week.
U.S. and Japan duke it out over exchange rate. Slumping onshore bond market.
latest business flash headlines. McDonald's has fired CEO Steve Easterbrook for defying company policy by having a relationship with an employee. The company's board voted on the move after investigating the relationship and promoted Chris Kempczinski to president and CEO. According to the Wall Street Journal, Easterbrook sent an email to employees Sunday acknowledging what he called his mistake and agreeing with the board that, quote, "It's time for me to move on."
Berkshire Hathaway has enjoyed its best quarter ever, with operating profit topping a record and net income rising to $52 billion. That makes it the most profitable listed company in the world, with $128 billion in cash. Berkshire has wide interests, from energy and insurance to car dealerships and jewelry. However, Class A shares are about 6% fall short of the 22% gain in the S&P 500.
Top Apple chip supplier Taiwan Semi says it expects significant growth next year amid strong demand for 5G handsets and new iPhones. Chairman Mark Liu says sales will rise from a year earlier as demand increases for Apple's latest smartphone in the coming months. The Trump administration has urged chip makers to work in the U.S., but Liu says that's not a tenable solution to worries about security. Saudi Aramco's valuation has become a talking point as it finally kicks off its long-awaited IPO process. Research sent to investors by banks involved in the offering saying that Aramco may be worth as little as $1.5 trillion or less. It's well below the target set by the kingdom. A Bloomberg News reporter, Matthew Martin, has more.
We're here in Tehran, the Aramco headquarters, where the Aramco chairman and chief executive officer have just officially announced the company's intention to float. So we're going to see Aramco shares trading probably next month. We're going to see a prospectus from the company on around the 9th of November. But we still do not know what the valuation of the company is looking to achieve is. The chairman, Yasser Al-Rumayyan, said today that the market will decide. It will be up to the book building process to determine the value of the shares, how big the offering size is, and ultimately what the valuation of Aramco will be. So still a huge amount of interest in this, a huge amount of scrutiny around what that final valuation figure is going to come up. Mohammed bin Salman, the Crown Prince, obviously said previously that he wanted it to achieve $2 trillion, but there has been a lot of skepticism around that. So within the next few weeks we should start to see an answer to those questions. I'm Matthew Martin for Bloomberg News here in Tehran.
And you can get more on the Aramco IPO and more stories in today's edition of Daybreak. Bloomberg subscribers, go to Daybreak Go on your terminals. It's also right there on the mobile in the Bloomberg Anywhere app. You can customize those settings for the stories that you care about. This is Bloomberg.
federal officials are investigating Under Armour's accounting practices. This is according to people familiar with the matter talking to the Dow Jones. Now, this would be a probe examining the company's shifted sales from quarter to quarter to appear healthier. Now, they have already questioned people in Baltimore, according to the Dow Jones, and the Justice Department prosecutors are conducting this as a criminal inquiry into the matter. They're also coordinating with civil investigators at the Securities and Exchange Commission to see if Under Armour's accounting practices are in line with the law as they investigate whether the company shifted sales from quarter to quarter to appear healthier, according to the Dow Jones. Let's now get the first word news with Sue Keenan. Sue.
All right, we're going to start with President Trump saying the potential Phase 1 trade deal with China is close to being completed, and he wants it signed in America. He has previously suggested Iowa as a venue for a deal, as it is the largest corn and hog producing U.S. state. Commerce Secretary Wilbur Ross has also hinted at Alaska and Hawaii, as well as various locations in China, for the two sides to formalize any deal. The Trump administration also has eased tensions with Europe, saying that tariffs on auto imports may not be needed. Commerce Secretary Wilbur Ross welcomed what he termed good conversations and told Bloomberg that these may not be required. Back in May, you may recall the White House delayed tariffs on imported vehicles and auto parts. Washington has reached agreement with Japan, but is yet to clinch a deal with the EU. Meanwhile, the governor of Okinawa is warning the U.S. to look elsewhere. This as the Pentagon hunts for the sites to deploy new missiles. Denny Tamaki says that any attempt to base new weapons would be firmly opposed by local residents. Tamaki was elected last year on a campaign to move the U.S. airbase out of prefecture. He says that Okinawa carries an unfair burden by hosting half of the 50,000 U.S. military personnel in Japan. And the U.S. and South Korea will suspend a planned military drill for a second straight year, this to avoid raising tensions with North Korea while denuclearization talks continue. Yonhap News says the joint exercise, codenamed Vigilant Ace, is scheduled for December and involves hundreds of aircraft, including U.S. strategic bombers. Yonhap says officials will have a final decision later this month. Global News 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan, this is Bloomberg.
So thank you. Australia opens at the top of the hour. Soph's watching that open for us. Soph. Well, Heidi, we're keeping an eye on Westpac after the bank reported a dismal set of earnings. Its first decline, in fact, since 2009, after posting a 15% drop in full-year cash profit, highlighting just how tough 2019 has been for Australian banks amid the misconduct probe, which has seen lenders cough up $3.5 billion so far to pay for the industry's bad behavior. So while analysts had been prepared for a poor result from Westpac, this was worse than forecast, with a return on equity falling 225 basis points, and the final dividend was slashed to 80 cents a share from 94 cents last year. And Westpac is seeking to raise $1.4 billion at a 9.2% discount to Friday's closing price to meet capital rules. Now on Friday, Westpac shares closed at an August 28 low on after sliding for 5 straight sessions. And Westpac CEO Brian Hartzer, he said the challenges certainly do remain after this disappointing year, Heidi. Alright, so the camera in there in Hong Kong. Let's get more watching as trading gets underway across Asia. Bloomberg's global markets editor Adam Hayes here. Adam, we saw pessimism give way to optimism again. No doubt it'll go around in swings and roundabouts again when it comes to trade. But I'm wondering if those comments from President Trump really had enough substance to keep Treasury yields edging higher and equities gaining higher as well.
Yeah, well, I think, Heidi, we can say at least that it, firms up the position that markets have been taking, is that we will get a resolution, we'll get this phase 1 deal signed, and indeed that's the kind of move that you've seen overall, broadly speaking, in the last few weeks. So the appetite to take a little bit more risk is clearly there, but as you allude to, there isn't anything more concrete for a year that's already been pretty good for treasuries. Of course, the last 12 months has been a really kind of tale of two halves, because you have had that constant threat and indeed materialization of easing of the US monetary policy, and indeed the bond bond market's still positioned for a little bit more Fed easing next year. So you would have thought there's still room for yields to edge a little bit lower. But as we get these kind of incremental data points like we did on Friday with the surprisingly good jobs report, but also an easing of the trade tensions, you are getting a pickup in yields, and we're still, you know, off those lows in Treasury yields that we saw back in the earlier part, you know, a couple of months ago or so. So we're still continuing that upward trend. The question is now, what have we got into the last 2 months of the year to really kind of upset the apple cart? This week we have a few regional Fed presidents who might give some more colour around the thinking for Fed policy next year. But as we heard last week from Powell, the situation is very well balanced at the moment, not really favouring the Fed to move in either way.
Adam, in Australia, there was an interesting analysis from Goldman Sachs that shows if QE is needed in the country, the stock market might not get the sugar hit it needs. What's that about?
Yeah, it was a very thorough analysis, and as we've seen from a number of different banks and companies over the last few weeks, this QE kind of planning is clearly taking place to a very, a large amount of detail. The base case for Goldman Sachs is that we don't get to this scenario, but if we do, they allude to some of the problems of buying securities when, things are already quite expensive. So if you compare their forward price earnings multiple on Australian equities today, around 17 on a forward number, that's significantly higher than the valuations you saw when the ECB began their program, when the Fed also and the Bank of England did theirs. In the case of the Bank of England in the early part of 2009, you were looking at a 10 times forward price earnings ratio, and if you compare that to 17 currently in Australia, they make the point that extra dividend you might expect in equities in Australia just wouldn't materialise. And of course, those elevated evaluations on the equity side are coming at a time where bond yields are already reasonably depressed. You've had a fair re-rating in bond markets, of course. So lots of calculations still being made, but a market that's moving a little bit further away from the idea of QE coming sooner than perhaps we were a few weeks ago, and that forward rate on cash rate futures for the RBA really only expecting maybe even less than 25 basis points of easing next year, and we've seen that pick up in yields, of course, continuing on short and long dated bonds in Australia.
Adam Hay, thank you so much. Bloomberg Global Markets editor, and of course you can find Adam's chart on the GTV Go library on the Bloomberg. Right, top Fed officials are hammering home the view that interest rates are on hold after another unexpectedly strong eco reading saw 128,000 new jobs in October. The data further validates the Fed's message and underscores continued consumer resilience. Our global economics and policy editor, Kathleen Hayes, is here with the latest. So, Kathleen, what have Fed officials been saying now?
That the economy is in a good place, Sherry. Monetary policy is in a good place. And remember, Rich Clarida, the vice chair of the Federal Reserve, you know he is going to be in step with Chair Jay Powell. You know when he speaks, as he did to Bloomberg Television, to the Japan Society, to another group later in the day, he was all over the map on Friday, but he certainly had the same message, and that was being upbeat after a stronger than forecast jobs report. Let's listen.
We have ongoing growth in the economy. We have inflation near our objective. So the economy is in a very good place. Growth is, as we've characterized growth as moderate right now. The global economy has been slowing, and that's a factor. But the U.S. economy is very resilient, and these are good numbers. Both the GDP number and the labor market number surprised a bit on the upside.
For Rich Clarida of the Bloomberg Library to look at the chart, these turquoise bars, keep your eyes right here, because this is what the Federal Reserve is watching so closely. This is the most important monthly report. It's the most coincident. It is also the most leading indicator in some ways. And what we got in the latest month, October, 128,000 jobs. That's even with 46,000 jobs lost to the GM strike. And it was versus 85,000 forecast. But this bar right here, you guys, up 180,000, a gigantic upward reduction of about 80,000 workers. In the previous month's reports, it wasn't just that October was stronger than forecast, it was because the previous month showed, hey, things were actually doing better in the labor market than we thought, making the Fed's call on the pause look pretty good. And in fact, Clarida did say, acknowledging, look, we're going to be data dependent. Every meeting's going to be live. But a lot of other Fed speakers, Randy Quarles, he's the vice chair for supervision, expert in banks. The cut puts the economy in a good place. John Williams, New York Fed president, jobs growth is strong. Mary Daly, San Francisco Fed. Policy is accommodative now with these 3 cuts. That's good. There are some risks, global risks that remain. Rob Kaplan, Dallas Fed. The cuts bring policy to an appropriate level. We should be patient now. 8 more Fed officials speaking this week. I expect they're all going to sing from the same book.
All right, what about here in Asia? We're expecting consensus, 3 big central bank meetings this week.
Well, nobody's expected to move, but it's interesting, particularly with the Reserve Bank of Australia and Phil Lowe, what they're going to be looking at. Now, of course, Mr. Lowe has led the RBA in 3 rate cuts in a row, and he's been worried about if things get weaker, will the government be ready to provide fiscal stimulus? But things have looked up just a little bit recently. Back to the Bloomberg Library, and you can see unemployment actually came down a tenth, 5.3 to 5.2. That's some progress, lower unemployment. And inflation actually ticked up to 1.7%, getting closer to the target again. That's why the RBA is expected to hold tight and see what happens next. Progress on the trade war won't hurt them at all. As for Bank Negara, the Central Bank of Malaysia, they're potentially going to keep their rate on hold. They have been pretty lucky. The trade war doesn't seem to have damaged their economy as much as some others. Reserve Bank of Thailand, they are dealing with a bot. And will they decide how to curb that bot rise that can be problematic? Will they cut rates to do that? Most people say no. They've got FX tools they can use instead. They too will wait and see. But I think the Reserve Bank of Thailand in particular, Sherry, is one we're going to watch very, very closely.
Kathleen Hayes, thank you so much. With all the major monetary policy decisions this week, and of course a major uncertainty for these central banks around the world is what happens on the U.S.-China trade front. U.S. Commerce Secretary Wilbur Ross spoke exclusively to Bloomberg in Bangkok about the prospects of a Phase 1 trade deal.
I think he suggested Iowa. There was a suggestion about Alaska. There was a suggestion about Hawaii. I'm sure the Chinese will have some suggestions in China. That should be the easiest part of the whole thing to negotiate.
But the trade deal will be signed in November.
Well, you say it wonderfully definitively, and I wish I could be as definitive. I think we're in good shape, we're making good progress, and there's no natural reason why it couldn't be. But whether it will slip a little bit, who knows? It's always possible.
Are there still obstacles?
Not so much obstacles, but making sure that each side has a very correct and clear, detailed understanding of what each side has agreed to. Trade deals are very, very complicated, and this one is particularly complicated.
Secretary Ross, it's been 5 months since the Huawei ban. Some American companies are still confused as whether or not they can deal with Huawei, do business with Huawei. Given the progress made through the Phase 1 trade deal, is there a possibility that Huawei could be removed from the entity list, or whether restrictions can be eased?
Well, first of all, Huawei is an enforcement action. Huawei is not a part of the trade negotiations. Second, there have been some 260 requests filed for licenses. The way the entity list works is you need a license to sell any controlled product to them. That's a lot of applications. It's frankly more than we would have thought. But remember too, with entity lists, there's a presumption of denial. So the safe thing for these companies would be to assume denial, even though we will obviously approve quite a few of them.
Speaking of licenses, the special licenses for Huawei suppliers based in the U.S., which are not dealing with security-linked components, when do you expect the Trump administration to issue those licenses?
Those will be forthcoming very shortly, as will...
What is shortly? Could you quantify?
It's shortly. It's less than longly. Yes.
Asian economies have been pretty disappointed by President Trump's absence for 2 years running now. And Asian economies are on the verge of signing RCEP, which is a trade pact backed by China. Is there concern within the U.S. leadership that perhaps the economies here may be even more economically dependent on China?
Well, first of all, RCEP is not much of an agreement. It's not a free trade agreement. It's not anything remotely like TPP, nor anything remotely like our separate arrangements with Japan and with South Korea. So I don't think you want to blow that out of proportion. It's a very low-grade treaty. Second, in terms of our participation here, it's very, very fulsome.
And that's the Commerce Secretary Wilbur Ross speaking exclusively to Al Haslinda and Wilbur Ross there, seeking to position the issue of the Huawei ban as being separate to the ongoing trade negotiations. We're just getting news from the Financial Times saying the US government is pushing Taiwan to restrict its biggest chip maker from producing semiconductors for Huawei. That's, of course, to institute stricter controls as well on tech exports to China. And we do know that Washington over the past year or so has been repeatedly making a request or putting pressure on various governments, but including the government of Taiwan in Taiwan to restrain Taiwan semiconductors from producing chips and selling chips to Huawei. Well, don't forget, if you're away from the screen, you can always find in-depth analysis and the day's big newsmakers over on Bloomberg Radio. We're now broadcasting live from our brand new studio in Hong Kong. You can listen via the app. That's at Bloomberg Radio Plus or at BloombergRadio.com. This is Bloomberg. Welcome back. Our next guest says a more constructive risk backdrop should ease demand for havens, while lower global interest rates act as a headwind. Joining us now from Sydney is Suncorp Group strategist Peter Grjecievich. Great to have you with us. So we're talking about the havens. We have seen the Japanese yen underperform, given more expectations of a U.S.-China trade deal. Where do you see the yen going forward, as some say that it may be undervalued?
Oh, I think if you're looking at it from a short-term kind of perspective, yeah, the markets are pretty much in a risk-on type of setting. Everyone's kind of upbeat around the prospect of at least a partial China-US trade deal. It's going to keep equities pretty supported, and even in the last couple of days, you've seen bond yields kind of back up a bit. So it keeps dollar-yen kind of a bit elevated, but you know, north of 109 to 110 is kind of a bit of a stretch. You really need to see a complete kind of shift in the global policy cycle and the Fed actually actively moved back to a tightening bias, and they pretty much signalled that they're on hold, but hikes are still a long way away, and we do still think that there's a little bit more scope for the Fed to provide a bit more support over the next 12 months. So that yield structure is going to stay fairly low globally, and that's going to see dollar yen kind of top out and then drift lower over a medium term kind of basis.
Do they need to signal or move towards tightening, or is it enough, say, for other central banks to continue to ease for the US dollar to actually remain supported?
I think it's probably the latter. I think it's a relative game, so even if the Fed kind of sits there and does nothing now after delivering a couple of insurance rate cuts, the rest of the world is still in a kind of easing mode. The ECB's latest QE program has only just kicked off again. You've got other central banks like here in the RBA and the RBNZ, and even the Bank of Canada's kind of turned a little bit more cautious as well. So the rest of the world, that divergence is still going to be there. And then if we do get a positive resolution around the trade story, that was one of the reasons why the Fed was cutting. So again, it just keeps them on hold for a longer period. So overall, on a net basis, it still keeps the dollar pretty supported over the next 12 months or so. But if you're looking at it from an even longer time horizon, then the dollar will eventually turn lower, but it will take the rest of the world kind of starting to do the heavy lifting.
Yeah, I just want to throw up this chart. Essentially what Sherry was kind of talking about, we had the Bloomberg Dollar Index suffering its worst month since January 2018. I'm wondering two things. If we do get a phase one, maybe even a phase two trade deal, is phase one already priced in FX markets? And how much, I guess, instability do we expect leading up to? We're only 365 days away from the US election.
I think phase one's pretty much priced in. All the rhetoric we've been getting is that it's going to be signed and they want to do it as soon as possible, before the next stage of tariffs. But phase two and phase three is where the hard decisions need to be made. And that's where you probably see more volatility and some of these risks be revived around the trade outlook. But I think ultimately both parties want to make a deal. I think if you look at it, a year away from the election, I'm sure Donald Trump would like to have a trade deal as something he can promote in the election campaign. And I would think the Chinese officials would rather deal with a pre-election Trump than a re-elected Trump, because he could be re-emboldened and then just generate those risks again. So over the next 12 months, we do think that we'll get more definitive trade deal, but it's still going to be a pretty hard slog over the next 6 to 9 months or so.
And the Aussie will stay suppressed regardless if the RBA holds or not. What if they do QE?
In Australia? It'd be an interesting dynamic to see what happens, but just looking at it, if you look at it, about 60% of Aussie government bonds are held by foreigners. So your net marginal seller is probably going to be more on the offshore rather than domestic holders, and that'll put more downward pressure on the exchange rate. Obviously, to get to there, you still need a couple more rate cuts from the RBA, and then they'll probably strengthen their forward guidance, and then QE, I think, is still the last resort kind of approach, but ultimately it would, I think, keep the Aussie on the back foot, and that's actually a good thing. It supports services sectors like tourism, education. It boosts inflation expectations via high imported prices. It's the kind of preferred mix of easing of monetary conditions that you can get, and I think that's something that the RBA will be front of mind about, is the exchange rate, given that is the transmission mechanism that's working the most effectively, because there is the debate around what rate cuts are actually doing for mortgage holders and obviously depositors as well.
Yeah. Always a pleasure. Thank you, Peter. Suncorp Group strategist Peter Drugisevich here. And watching us live, you can do that and see our past interviews on our interactive TV function. That's at TV Go on the Bloomberg. You can also dive into any of the securities or the Bloomberg functions that we talk about. You can join another conversation as well. You can send us instant messages during our shows. This is for Bloomberg subscribers only. It's at TV Go. This is Bloomberg. latest business flash headlines. Airbnb is banning so-called party houses and is clamping down on unauthorized raves at its rentals after a fatal Halloween night shooting in California. 5 people died in the incident, which police say took place in a home advertised on a short-term rental website. Airbnb says it will create what it calls a dedicated party house rapid response team and expand manual screening of high-risk reservations.
The chairman of the Thai Airways has quit as the flag carrier struggles to stem deepening losses. The airline has instigated a cost-cutting plan that includes a review of about 40 aircraft and has been forced to rebuff media reports of liquidity problems. Second quarter losses more than doubled amid the widening global slowdown, rising regional competition, and the strengthening baht.
The US has launched a national security review of the popular music video app TikTok, according to sources close to the investigation. TikTok is owned by Beijing-based ByteDance and is one of the most downloaded apps in the US, making it one of the few Chinese internet companies to succeed there. US lawmakers have called TikTok, quote, a potential counterintelligence threat that cannot be ignored. Well, that's just about it for Daybreak Australia. We're going to have all the action up next on Daybreak Asia. This is Bloomberg. Good morning, I'm Heidi Stradbot's in Sydney. We're under an hour away now from the market open in South Korea.
Good evening from Bloomberg's global headquarters in New York. I'm Sherry Yang.
And I'm Sophie Kamarudin in Hong Kong. Welcome to Daybreak Asia. Our top stories this Monday.
I think we're in good shape, we're making good progress, and there's no natural reason why it couldn't be.
Deal or no deal, Wilbur Ross tells Bloomberg a China agreement is near. President Trump wants the signing to take place in the United States. The world's top oil company presses go on its long-awaited share sale. Saudi Aramco brushes off concerns and says the price is right.
And all change at the Golden Arches. CEO Steve Easterbrook is fired after breaking company policy on personal relationships with an employee. Australian markets have opened for trade. Let's get you straight to the market action. Sophie.
Well, Sherry, Aussie shares are opening higher by 0.2%. This after the first week of the drop that we saw for the benchmark in 4. We're keeping a close eye on Westpac after a disappointing set of earnings. And Aussie yields this morning tracking Friday's drop in treasuries, rising 6 basis points amid trade optimism and a strong jobs report that we saw for the U.S. And the Aussie dollar is firmer this morning, but off the 3-month high that it touched on Friday. And checking in on the offshore yuan, trading below 704 this morning, building on Friday's gains amid signs of stabilization. So Asian stocks broadly look set to rise this Monday, while Japan is offline for the long weekend. Semiconductor players will be on watch on an FT report that the U.S. government has urged TSMC to stop supplying chips to Huawei. And here's where we stand as November trading warms up. The Asian regional benchmark has outperformed the S&P 500 over the past 2 months, as you can see on this chart. And of the past 16 sessions, Asian stocks have only lost ground in 3. Now on Friday, Chinese stocks had the best day since mid-August. The Kospi closed above 2,100 points, and the Nikkei 225, that's about 150 points shy of 23,000. Now this rally has been partly supported by the recovery in Asian tech hardware plays, but Credit Suisse warning the potential for a reversal that cannot be ruled out, Heidi.
All right, Sophie Cameron there in Hong Kong. Let's get you the first word news now. Sue Keenan is in New York for us. Sue.
Thank you, Heidi. We're going to start with Saudi Aramco. The company may be worth $1.5 trillion or even less, and that's according to research sent to potential investors by the banks involved in the company's long-awaited IPO. It is well below the $2 trillion target initially set by the kingdom, and it suggests a struggle to pinpoint a precise valuation. Aramco says it'll list on the stock exchange in Riyadh and likely start trading next month.
It is very safe, and if you want to have a full proof to that, you see the oil prices. Oil prices went up the first 2 days by about 20%, then it came down by 10%, and all the future traders saw this as an honor event. This is fact. We have 1/8 of the oil production in the world, and the oil traders, they saw this as an event, and that means it is really safe. That's what the money is saying.
To Okinawa now, the governor there is warning the U.S. to look elsewhere as the Pentagon hunts for sites to deploy new missiles. Denny Tamaki says any attempt to base new weapons would be firmly opposed by local residents. Tamaki was elected last year on a campaign to move the U.S. air base out of the area. He says Okinawa carries an unfair burden by hosting half of the 50,000 U.S. military personnel stationed in Japan. And at least 200 people were arrested in Hong Kong as pro-democracy protesters clashed with police once again over the weekend. On Saturday, police fired tear gas and deployed a water cannon on demonstrators who had built barricades across streets. More unrest broke out Sunday when police and protesters clashed at shopping malls and a pro-democracy district councilor was attacked. To New Delhi now, where pollution has worsened to levels that the government says should be treated as a public health emergency. The air quality index rose to 744 in some parts of the city over the weekend, and that's according to the website Monitor Air Visual. 50 is seen as safe, and any reading above 300 is regarded as hazardous. The toxicity is being blamed on a range of factors, and they include construction dust, agricultural burning, and auto emissions. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan, this is Bloomberg.
Sue, thank you. Well, the US and China say they're close to agreeing to the first part of a trade deal. Commerce Secretary Wilbur Ross spoke exclusively to Bloomberg, expressing optimism that the so-called Phase 1 deal will be reached this month.
I think we're in good shape. We're making good progress, and there's no natural reason why it couldn't be. But whether it will slip a little bit, who knows? It's always possible.
Let's get over to our China correspondent Tom McKenzie, who's with us in Beijing. Tom, no natural reason why it wouldn't be done. What needs to be done before we have a signing?
Well, it sounds like they are very close. Of course, we had that phone call between the likes of Liu He and Mnuchin and Lighthizer on Friday, so the lead negotiators on both the US and Chinese side. And on the back of that phone call, we got a statement from the Chinese saying that there was an agreement in principle on some of the core issues. Now, the US were a little bit more circumspect on the back of that phone conversation, but they did say there had been progress, and of course, as you heard there from Wilbur Ross, he sees no natural reason why there can't be a deal signed later this month. In terms of what work needs to be done between now and any potential signing, it seems like the details, just ironing out the details around, for example, agricultural purchases and intellectual property, and exactly how China is going to be opening up its financial markets, all part of this phase one deal. Ironing out those details is still what is in focus for the deputies as these trade talks continue. But of course, President Trump came out of the weekend. He was sounding very optimistic. He says he wants to see this deal potentially signed in the US as well at some point. But as we've been reporting, this is the phase one deal. It includes those components that I mentioned there, but it is the phase two and phase three where, of course, there is skepticism here in China and further afield as to whether or not progress can be made there. We were reporting, of course, last week on the fact that China has and looks at President Trump with a great deal of skepticism. They effectively don't trust him to keep to his word. That is a key concern for them. And of course, they want to see all the tariffs removed if they're going to see a comprehensive deal. And then, of course, we've got the age-old issue of whether or not China's actually going to really budge on things like industrial policy. But in terms of the phase one deal, both sides seeming to suggest there has been progress. The question is where they're going to be signing this and when.
Have we heard anything on what will happen to the Huawei front on selling components to the company?
Well, Wilbur Ross talked about this, didn't he, to Haslinda, and suggested that there would be, in the near future, a decision made by the White House to allow some of these US companies to export some of these components, non-core components, you would expect, to Huawei. Of course, this is something that President Trump had pledged to do earlier this year, and we've still been waiting for follow-through, and Huawei have been waiting for follow-through because they desperately need those core components, and particularly the Android software. Now, there's a big question as to whether or not Google will be able to continue working with Huawei, but certainly that is an area that China would like to see some progress on before they really get forward or move forward on a comprehensive deal. I think they can get to phase one without those commitments on Huawei, but in terms of getting an all-encompassing deal, they will need to see some progress in terms of the Huawei situation. And in terms of the location, by the way, of course, we had President Trump saying he'd quite like to see this deal signed in the US. He's expressed and communicated his preference for Iowa, which of course is the state that produces the most corn and the most hogs in the US. Now, you would expect the Chinese would be very cautious about sending President Xi to the US to sign off on any phase one deal, because again, of their concerns about the lack of trust around Trump and whether or not he would pull back or make any last-minute demands. But nonetheless, the US saying that maybe Iowa is in play, maybe Hawaii, maybe Alaska, but of course, Wilbur Ross also saying that China was also potentially an option for signing off on this first part of the deal.
All right, thanks so much, Tom McKenzie there in Beijing. We're going to have more on trade ahead. We'll hear direct from the Commerce Secretary, Wilbur Ross, and our exclusive interview coming up just after the break.
Plus, Saudi Aramco's evaluation could fall far below the original target of $2 trillion. The details coming up. This is Bloomberg.
Brian in New York. And I'm Hattie Stroud-Watts in Sydney. Well, the 35th ASEAN Summit is underway with leaders from the 10 member states meeting in Bangkok. Among the attendees are Chinese Premier Li Keqiang and US Commerce Secretary Wilbur Ross, who says he is optimistic on a trade deal. Our chief international correspondent for Southeast Asia, Haslinda Amin, is at the event.
Well, trade front and center, Heidi, ASEAN nations in particular have been caught in the middle. They've become collateral damage of this prolonged US-China trade war. Remember that Malaysia is on the verge of being imposed with sanctions on palm oil. We have Vietnam being singled out by the US for its trade surplus with the US, and of course Singapore's been dragged into it as well. It's among countries in the watch list named by the US for its currency practices. So ASEAN nations have been front and center, in the middle, caught in the middle of it all. And it's not surprising that over the weekend we heard the leaders from ASEAN nations, the likes of Lee Hsien Loong, the Prime Minister of Singapore, saying that ASEAN nations will have to come together even more, coordinate even better in areas such as digital economy and smart cities. We have to explore further how to fund these initiatives to bring the economies together. Now, this is an organization, a nation, a region of 10 nations, disparate at different levels of development, so it's been pretty challenging. We also heard from Mahathir Mohamad, the Prime Minister of Malaysia. He talked about coming together with one voice, responding with one action to all the measures being imposed on the region by the US. He cheekily suggested that perhaps ASEAN nations should impose a tit-for-tat initiative response to whatever the US is imposing on the nations. Like we said, trade front and center. I caught up with the US Commerce Secretary to find out the status of negotiations between the two sides. Take a listen.
I think he suggested Iowa. There was a suggestion about Alaska. There was a suggestion about Hawaii. I'm sure the Chinese will have some suggestions in China. That should be the easiest part of the whole thing to negotiate.
But a trade deal will be signed in November.
Well, you say it wonderfully definitively, and I wish I could be as definitive. I think we're in good shape, we're making good progress, and there's no natural reason why it couldn't be. But whether it will slip a little bit, who knows? It's always possible.
Are there still obstacles?
Not so much obstacles, but making sure that each side has a very correct and clear, detailed understanding of what each side has agreed to. Trade deals are very, very complicated, and this one is particularly complicated.
Secretary Ross, it's been 5 months since the Huawei ban. Some American companies are still confused as whether or not they can deal with Huawei, do business with Huawei. Given the progress made through the Phase 1 trade deal, is there a possibility that Huawei could be removed from the entity list, or whether restrictions can be eased?
Well, first of all, Huawei is an enforcement action. Huawei is not a part of the trade negotiations. Second, there have been some 260 requests filed for licenses. The way the entity list works is you need a license to sell any controlled product to them. That's a lot of applications. It's frankly more than we would have thought. But remember too, with entity lists, there's a presumption of denial. So the safe thing for these companies would be to assume denial, even though we will obviously approve quite a few of them.
Speaking of licenses, the special licenses for Huawei suppliers based in the US, which are not dealing with security-linked components, when do you expect the Trump administration to issue those licenses?
Those will be forthcoming very shortly, as will...
What is shortly? Could you quantify?
It's shortly. It's less than wrongly.
Asian economies have been pretty disappointed by President Trump's absence for 2 years running now. And Asian economies are on the verge of signing RCEP, which is a trade pact backed by China. Is there concern within the U.S. leadership that perhaps the economies here may be even more economically dependent on China?
Well, first of all, RCEP is not much of an agreement. It's not a free trade agreement. It's not anything remotely like TPP, nor anything remotely like our separate arrangements with Japan and with South Korea. So I don't think you want to blow that out of proportion. It's a very low-grade treaty. Second, in terms of our participation here, it's very, very fulsome.
U.S. Commerce Secretary Wilbur Ross there now. He's delivering a keynote address later today. That will be the focus for leaders here in ASEAN to see the direct, a lot of talk about how the U.S. has pretty much snubbed ASEAN nations by Trump's absence at this particular meeting. Everybody is curious as to see what kind of engagement will be taken in the years to come, or in the months to come even.
Yeah, since for a second year, right? Haslinda, thank you so much for that. Our Chief International Correspondent for Southeast Asia, Haslinda Amin, and we'll have more from the ASEAN Summit later. Haslinda will be speaking with Michael Mahalat from the U.S. ASEAN Business Council and the U.S. Chamber of Commerce's Charles Freeman. Coming up next, tech is outperforming the broader market as U.S. stocks hold at record highs. We'll ask if there's any momentum left in the sector. This is Bloomberg.
foreplay?
Eat your bag of leaves with a smile on your face.
All the diseases have been taken. I'll take a tax.
This is Deborah Gager. I'm Hattie Stroud-Watts in Sydney. And I'm Chevrillon in New York. U.S. stocks are at a record with the tech sector helping to lead the way. But our next guest says we are at the top of a tech bubble. Let's cross to San Francisco and Vincent Deluart, global macro strategist at INTL FC Stone. Vincent, great to have you with us. So we have seen tech really its correlation with momentum starting to fade a little bit. This GTV chart on the Bloomberg showing that just last year there was a very high correlation between the FANGs and also a momentum ETF MTUM. Now that's fading as we continue to see bond-like sectors now gain more demand. How cautious are you about this sector in general?
Well, I mean, this is precisely one of the things that worries me is that for most of the past 3-4 years, we saw a very strong correlation between tech and long-term yields. And that makes sense because if you think of a typical unicorn with a very negative cash flows at the beginning and hopefully very high growth in the next 5 to 10 years, it is a very high duration asset. So when yields were dropping, we usually saw the big unicorns rally, and that relation broke last summer. And my interpretation of this kind of momentum massacre is that the market is starting to question whether there's any level of rates that can make some of these unicorns work. I mean, if you have negative cash flow, even at negative rates, you end up with a negative present value.
So then, if you don't like growth, if you don't like tech, where do you go?
Well, obviously the anti-growth, anti-tech trade has been international equity and value, and we've seen a modest comeback of value. Interestingly, we haven't seen, value hasn't outperformed as much as growth or momentum has disappointed, which is another reason why I'm cautious in the market in general, because we've certainly lost the leadership that we had in the past 3-4 years, but we haven't found the theme that will eventually pick up yet.
Vincent, you say that emerging markets are looking more interesting. Where specifically would you be looking at?
Well, in general, I guess where my call is out of consensus is that I feel that there will be a revival of inflation, and in many ways it has to do with the tech meltdown, and I hope we can get to that in a couple of minutes. So in general, I think inflation-sensitive assets trade at millennial lows. Commodity-oriented emerging markets have been especially hard hit, so I would probably avoid the more tech-sensitive EM like China, like South Korea, and favor the more resource-heavy emerging market indices.
Yeah, I'm looking at your notes. You're saying that Bay Area companies would need to hike their prices by 40% if they were to operate under normal business models.
Yeah, so that's the part I wanted to go into. So I looked at basically the 6 zip codes around San Francisco and Silicon Valley, and I built an index of about 200 companies in there, 5 trillion market cap. And I looked at how much they pay in dividends and buybacks. That's close to zero. How much they pay on debt. That's close to zero. How much they pay on taxes. That's close to zero. So effectively, they don't have to pay. They have free capital. They don't pay taxes. They don't need to have earnings. And perhaps more importantly, they pay most of their employee comp in stocks. So if you think in terms of like the cash leaving the company, there's almost none. So this really leaves them with a lot of ability to undercut on prices, and basically that's the model that we've seen with WeWork, with Lyft, with Uber, where you accumulate these very large losses early in order to build this consumer base. And my case is that as the market for this kind of model dries up, you're going to see very sharp price increases. The question I was trying to answer is how much of a price increase? Could that affect the CPI? And my answer is yes. I mean, if you factor all that in, you assume that the Bay Area companies would behave like normal companies, you'd get to price increases of the order of about 40%.
Okay, so it's a bit of a chicken and egg situation.
Correct. That's exactly where I was trying to go at. For the past decade, we had this story that inflation is dead. I think actually it was Bloomberg Business Week who had this cover with a dinosaur saying big capitalism kill inflation, right? Because inflation is dead, then we have these very low rates and these inverted yield curves. Because we have low rates and inverted yield curves, we have this big unicorn bubble, and everybody wants to allocate to VC. Pension funds are desperate for yield, so you see this mad rush into a very tiny asset class. And then you have all these entrepreneurs that are hit with a wall of money, and somehow they have to justify that they are the Amazon of this, the YouTube of that, the Netflix of that. So the best and easiest way to do that is just to subsidize your customer and sell below cost. As they do that, we see less and less inflation, and then the circle keeps going again and again. What worries me that I think this is breaking because the valuation on these tech companies are starting to break down.
Right, Vincent Delnor, thank you so much for joining us. That was global macro strategist at International FC Stone. Let's now get a quick check of the latest business flash headlines. Westpac is raising money and slashing its dividend as profit missed estimates. It aims to raise about 2.5 billion Aussie dollars in a share sale as cash profit fell 15% in the year ended September 30th. The dividend is being cut to 80 cents from 94 cents last year. Westpac says it's raising money to meet new regulatory standards and give itself the flexibility to deal with any potential litigation.
Reports say federal officials are looking into accounting practices at Under Armour and whether the company manipulated the numbers to appear healthier. Dow Jones says the inquiry is focused on whether Under Armour shifted sales from quarter to quarter, with the Justice Department and SEC questioning people in the past few days. There's been no comment yet from either the company or the investigation team.
The U.S. has launched a national security review of the popular music video app TikTok, according to sources close to the investigation. TikTok is owned by Beijing-based ByteDance and is one of the most downloaded apps in the U.S., making it one of the few Chinese internet companies to succeed there. U.S. lawmakers have called TikTok, quote, a potential counterintelligence threat that cannot be ignored. And coming up next, McDonald's has fired its CEO for breaching internal rules on staff relationships, the latest on Steve Easterbrook's ousting ahead. And of course, we're looking ahead to the Open in South Korea. We have seen the cost be higher for the past 2 sessions, and futures also pointing to a higher Open. Already, Korean stocks at the highest level since September. Plenty more to come. This is Bloomberg.
Daybreak Asia. I'm Sue Keaton with the First Word headlines, and we start with President Trump. Trump saying that the potential Phase 1 trade deal with China is close to being completed, and he wants it signed in the U.S. He has previously suggested Iowa as a venue for a deal, as it is the largest corn and hog-producing U.S. state. Commerce Secretary Wilbur Ross, on the other hand, has hinted at Alaska and Hawaii, as well as various locations in China, for the two sides to formalize any deal. Meanwhile, the Trump administration has eased tensions with Europe, saying that tariffs on auto imports may not be needed. Commerce Secretary Wilbur Ross welcomed what he termed good conversations, and also told Bloomberg that duties may not be required. Back in May, you may recall, the White House delayed tariffs on imported vehicles and auto parts. Washington has reached agreement with Japan, but has yet to clinch a deal with the EU. Meanwhile, the U.S. and South Korea will suspend a planned military drill for a second straight year, this to avoid raising tensions with North Korea while denuclearization talks continue. Yonhap News says the joint exercise, its codenamed Vigilant Ace, is scheduled for December and involves hundreds of aircraft, including U.S. strategic bombers. Yonhap says that officials will make a final decision later this month. And the European Central Bank enters what's being called the Lagarde era. That'll be later Monday when the new president makes her first public policy address. We're talking about Christine Lagarde. She will speak in Berlin at a time when ECB policymakers are split over stimulus plans, with the Eurozone economy teetering on the edge of recession. Analysts expect her to call on governments to do more to boost demand and lift growth and low inflation. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
Australian markets have been trading for about half an hour. Let's turn to Sophie for what to watch. Sophie.
Well, Sherry, ASX 200 has climbed above 6,700 points, being led higher by resource and tech plays, while financials are under pressure this morning as Westpac's earnings miss adds to a bleak outlook for Australian banks. Now, NAB reports on Thursday, and heads up, Westpac shares are suspended from trading this Monday. Now, checking in on the Aussie dollar, trading at 69.10 after the best weekly gain since September, and it could be headed to 70, the highest level since July, as futures traders cut their short positions. And Aussie yields are climbing 2 to 6 basis points across the curve ahead of retail sales and a private gauge on inflation, which are released before the RBA meeting on Tuesday, trade data on Thursday, and home loans on Friday. Now, Governor Lowe is seen standing pat this week to keep the key rate at 75 basis points amid worries that low interest rates could be doing more harm than good to the economy, which may be encapsulated by the slide in consumer and business confidence, which we've seen since June. That's when the RBA began this easing cycle. And CBA's Michael Blythe, he points to other signs of the negative confidence effects, with mortgage holders using the rate cuts as well as tax rebates to pay off debt instead of spending. Heidi.
Sophie Cameron in there in Hong Kong. Saudi Aramco has finally kicked off its long-awaited IPO process. Regulators have approved the offering, with shares likely to start trading next month after Riyadh was said to be willing to accept a lower valuation to ensure the deal's success. Joining us now is our Asia Energy reporter Jim Thornhill. Bloomberg's obtained details of the valuations. There's a massive range.
That's right. That's right. They're showing us two things essentially. Firstly, that Saudi Arabia's initial valuation above around 2 trillion was a little bit too high, and most of the Wall Street banks that we've obtained these details from, their valuation is somewhat below that. And in fact, as you were saying, the Saudis' decision to pull the trigger on that IPO was based, if you believe the sources, that on an acceptance that they won't get that 2 trillion, that they're more likely to accept 1.6 to 1.8 sort of range, and that's yet to be seen because we haven't really seen the details from what Riyadh is actually hoping for from this IPO, but certainly that's the indication. And of course, the other thing it shows is that, as you were saying, that the huge valuation ranges. I think the Goldman's one, the range was around $1 trillion, which is more than the market cap of some large oil companies. So it shows you that they're really struggling to pinpoint an exact value on this Saudi Aramco company.
Some are saying that even if it wasn't for the price, that it's not really immediately enticing when it comes to Saudi Aramco, just because of these investors now wanting to add more oil shares. So how much of the problems that the company faces are more macro and more structural?
Well, I mean, I think this speaks to the difficulty that banks are having in valuing the company, because you just don't know what's around the corner in terms of shocks to the oil price, and of course the company is so sensitive. I mean, it's obviously fundamental to the valuation, and when you've got the price moving around so much, it becomes very difficult to pinpoint a value. So of course we had those drone strikes in September, which have massive ructions in the crude market, which is what some people say derailed the IPO that was initially planned for earlier in the year. Now we're moving ahead to December, and they'll be hoping, presumably, for some price stability in that. And the fact that they're going ahead suggests they are reasonably constructive on the outlook for prices. But who knows what's around the corner in terms of geopolitics? That region remains incredibly volatile. Iran's an uncertain player. We don't know if they might ratchet up tensions, or the US as well. So it just underlines the difficulty for the Saudis in getting top dollar for this IPO.
Jim Thornhill, thank you so much for that, the Asia Energy reporter. Let's turn to McDonald's, because the company has fired CEO Steve Easterbrook for defying company policy by having a relationship with an employee. The board approved the decision after investigating the relationship and promoted Chris Kempczinski to president and CEO. Bloomberg editor Ross Krasley joins us with the latest. Ross, so how big of a loss is this for McDonald's?
Well, it seems like it's a pretty big loss because Steve Easterbrook has been regarded as one of the best, if not the best, CEOs in the restaurant segment of the stock market. He was the mastermind, if you will, behind McDonald's introduction of all-day breakfast over the past couple of years, and has really sort of started to remake the venerable burger company, the Big Mac company, into a bit of a tech company. This year, McDonald's has bought some tech startups, the kind of companies that are helping them to do targeted marketing and also speed up lines with voice recognition and various things like that. So Easterbrook has been kind of spearheading that. There are very few companies in the S&P 500 that have done better than McDonald's over the past 4.5 years. So, people are very much on alert to see if there'll be any kind of downgrades or just how the market will respond on Monday to this news.
Yeah, and it's, a big loss in terms of the performance of the leadership, right? Is there a deep bench of talent where they can kind of pull from for the next stage in terms of his replacement?
Yes, well, I think it's commonly accepted that McDonald's does have a strong bench of talent. And in fact, Chris Kempinski, who now becomes the CEO, he had been the USA president of McDonald's. He'd been with Easterbrook through many of the changes to the restaurants themselves, the menus, and so on. So he's seen as somebody who can step in, and he actually gave a short interview earlier this evening saying that, promising basically continuity. But by the same token, Steve Easterbrook was only in his early 50s and was somebody who was probably expected to stick around for quite some time. So any kind of succession plan that might be put in place at McDonald's for when he left probably wasn't in train at this point. It's kind of interesting about McDonald's, actually. They've had some big CEO changes all of a sudden over the years. If you look back to 2004, their CEO, Jim Cantupo, actually had a heart attack and died. And then the gentleman, Charlie Bell, who replaced him, was diagnosed with cancer and died the following January. So over the years, McDonald's has dealt with things like this. They've had their ups and downs, and certainly this is a major challenge for them.
All right, Rose Krasny, our Bloomberg editor there with the latest on McDonald's. Coming up next, central banks across Southeast Asia are forecast to ease this week on the heels of the Fed's rate cut. We'll be speaking to Priyanka Kishore with Oxford Economics on whether the monetary moves will be sufficient. This is Bloomberg. This is Daybreak Asia. I'm Heidi Stradwatts in Sydney.
And I'm Shemrian in New York. Let's get a quick check of the latest business flash headlines. Berkshire Hathaway has enjoyed its best quarter ever, with operating profit topping a record and net income rising to $52 billion. That makes it the most profitable listed company in the world, with $128 billion in cash. Berkshire has a wide interest from energy and insurance to car dealerships and jewelry. However, Class A shares are up about 6% this year, well short of the 22% gain in the S&P 500.
Top Apple chip supplier Taiwan Semi says it expects significant growth next year amid strong demand for 5G handsets and new iPhones. Chairman Mark Liu says sales will rise from a year earlier as demand increases for Apple's latest smartphone in the coming months. The Trump administration, in the meantime, has urged chip makers to work in the US, but Liu says it's not a tenable solution to worries about security.
The chairman of Thai Airways has quit as the flag carrier continues to stem deepening losses. The airline has instigated a cost-cutting plan that includes a review of about 40 aircraft and has been forced to rebuff media reports of liquidity problems. Second quarter losses more than doubled amid the widening global slowdown, rising regional competition, and the strengthening baht.
Australian mining tycoon Gina Rinehart is back in Bloomberg's top 10 of the world's richest women as her closely held Hancock Prospecting Company reported improved results on rising iron ore prices. Hancock revenue rose 39% in the year through June, with net profit climbing 90% to the equivalent of $1.8 billion. Rinehart's personal wealth has now risen to $17.9 billion. Well, don't forget, if you're away from a screen, you can always find in-depth analysis and the day's big newsmakers on Bloomberg Radio. Now broadcasting live from our brand new studio there in Hong Kong. You can listen in via the app, that's Bloomberg Radio Plus, or over at bloombergradio.com. This is Bloomberg.
Our top stories this morning in D.C. and down in the S&P.
Shall we? So the euro on a 7-day
Sizable moves in the currency market, which is down half.
We begin in the oil patch. Saudi Arabia.
Pretty much unchanged.
Welcome to Bloomberg, the first word Asia week.
The U.S. and Japan duke it out over exchange rates. Slumping onshore bond market.
This is Daybreak Asia. I'm Shemrian in New York.
And I'm Heidi Stradwatts in Sydney. Well, Westpac capped a rough year for Australian banks, the worst earnings since the global financial crisis. The country's second largest lender will raise about 2.5 billion Aussie dollars in new capital and slash its dividend as full-year cash profit plunged 15%. Our finance reporter Emily Cadman joins us now. And it was a horror year for all the lenders.
Yes, exactly. I mean, and what we just see in Westpac is a culmination of a lot of the trends that we've seen coming through. It's kind of being battered from all sides. It's got the cost for misconduct, low interest rates for crimping margins, and it's just finding it harder and harder to eke out profitability against an environment where regulators wanted to hold more capital. So, you know, we've grown accustomed to earnings just keeping growing from all of the big lenders, actually. And now this year we've had, for Westpac, it's been its first drop since 2009 when it was struggling with the aftermath of the global financial crisis.
So give us a bit more detail on how they're planning to shore up their balance sheet.
Okay, so what the bank is looking to do is it's looking to raise capital, both from investors and retail shareholders. So it's doing a 2 billion share issue to investors. That's why it's not going to be traded today. Its shares are frozen for today on the market, and it's going to, and a reflection, I guess, on, you know, the need to attract new business. Maybe there's slight difficulty, maybe, you know, just the fact that it wants it to get away well. You know, it's going to have to, it's offering its shares at a discount to the current market price.
All right, Emily, thank you so much for that. Our finance reporter Emily Cadman there on Westpac. Well, markets are opening in Seoul at the top of the hour. Japan, of course, offline today. It is Culture Day in Japan. So, what are we watching?
Well, in Asia today, we're keeping an eye, of course, on what's happening in South Korea because Japan is offline. Now, we did have a soft string of earnings from various industries in South Korea. I want to highlight travel agency Hana Tour, for example, which did report a narrower than forecast loss in the third quarter, but the outlook does remain challenged in the face of slumping demand for package tours. Now, Kumho Petrochem delivered a weaker than expected set of earnings. Now, Citi downgraded Lotte Chemical after its third quarter net income fell by 58% as margins were squeezed in its polymer business. Now, before the results, there were 26 buys, 10 holds, and 1 sell of a stock. And of course, this week, Heidi, we're keeping an eye on central banks with the RBA up to bat on Tuesday, a hold expected from Governor Lowe. Heidi.
All right, so for Cameron in there in Hong Kong, well, there's been a major delay in negotiations for 16-nation trade deal talks spanning much of Asia. This is the RCEP agreement that had been expected later on Monday, but talks are now set to continue until February. Our next guest says the deal would help maintain Asia's prominence when it comes to global trade. Let's bring in Oxford Economics Head of India and Southeast Asia Economics, Priyanka Kushur. Priyanka, great to have you. You know, at a time when we're seeing an 11th straight month of declines for South Korean exports, this is the really, you know, the bellwether for trade demand in the region. Asia could really use a fast-tracked RCEP. What's been the hold-up?
Yes, I agree that, you know, a regional trade deal like RCEP at this point of time would be very beneficial because since the onset of the global trade war, all talk has been about more regional integration and how looking inwards in terms of, you know, maintaining those supply chains within Asia would help the region a lot. The holdup, as we are all pretty much aware, has been India. It seems India has concerns about cheap Chinese imports flooding its market and is pushing for better safeguards against that. And for now, it seems that Prime Minister Modi has had his way, and talks and final conclusion are postponed until February of 2020.
Priyanka, how much of a boon would it be once this actually does get signed sometime after February for the demand side of things in Asia? Because we are seeing, you know, everywhere from Hong Kong to South Korea, that we are seeing the impact of the trade war. Or are we seeing the bottoming of that effect, given that Chinese manufacturing PMI was actually surprisingly upbeat last week?
So the Chinese PMI depends on which one you're looking at. The one from Caixin has been quite upbeat, but the official PMI continues to paint a different picture. It helps to know that, you know, both of these PMIs actually gauge a different set of industries within China. Looking at data itself per se, yes, in real volume terms, not only in China but also in South Korea, where you said there have been 11 months of decline, there are signs that in real terms export volumes have actually bottomed out and are actually showing some signs of even revival. But how long that lasts in this current environment, where, you know, we go from one mini deal to another and the overall trade picture remains quite worrisome. Moreover, China itself seems more comfortable with growth coming off rather than, you know, trying to continue to push it up from these levels sets a very different kind of picture. So of course, in this environment, it's not something that will happen immediately. We will not see the impact of something as big as RCEP coming probably as soon as 2020. But over the next 3 to 5 years, as tariffs go down. So for example, for India, it would mean eliminating tariffs for over 90% of its imports from ASEAN. It could give a meaningful boost to trade in the region.
If you're saying that China will become more tolerant of slower growth, then does that mean that we might not see as much fiscal and monetary stimulus from Beijing?
Our view for a while has been that while Beijing does want to support growth, it's not going to go overboard in terms of policy stimulus. And that is pretty much what has played out. Even on the fiscal front, it has relied more on tax cuts that has relatively less impact in terms of multiplier effects on the economy as compared to, let's say, a more direct and pronounced infrastructure push. So yes, we do think that growth could slip below 6% next year, and Beijing would not let it fall off the cliff, but they seem to be fine with the slow deceleration.
How will India do this year and next?
What would India do? India is caught between either addressing supply side rigidities or trying to revive its ineffective demand at this point of time, and a lot depends on in terms of cyclical recovery versus structural progress as to what policy is targeting. It seems to be a two-pronged approach, with monetary policy continuing to focus on lowering rates and stimulate credit growth, whereas measures from the government have been more regulatory in nature, more geared towards medium-term supply side concerns. But I think the hesitance towards pushing on fiscal levers to revive growth seems to have gone down quite a bit in recent months, and push comes to shove, we could see more of fiscal stimulus coming through in India.
And in terms of monetary policy, of course, the two big ones, other than the Reserve Bank of Australia, we're watching Bank Negara and Bank of Thailand. You're expecting further easing on the back of the Fed moving last week from both of those central banks.
Yes, that's right. I think for Bank of Negara, that's an out of consensus call, but we think that they have been delivering preemptive cuts, and in the current environment where, although Fed seems to have indicated what we read in-house as a soft pause, there is still ample reason in the current growth environment for central banks to take opportunity of a dovish Fed overall and continue pushing ahead with rate cuts. For Thailand also, inflation remains significantly below its target range. So all the more, given the downside risk to growth, that is where central banks appear to be leaning.
Priyanka, if we do get a resolution when it comes to the US-China trade deal, or the phase one of the trade deal, how meaningfully impactful is it on some of these Southeast Asian economies? Or is there more of a domestic demand story that's going to be the driver?
If we get a very meaningful deal, of course, it's an upside surprise. What we consider in our baseline is not a very meaningful deal, more of palliative, and even that does remove some downside risks from the baseline. So we are less worried about growth being even lower than what we are forecasting than perhaps what we were in early August, when there were renewed outbreak of concerns on the trade war front. And alongside the fact that domestic demand does provide somewhat a cushion to the external headwinds amid accommodative policies, it continues to paint a picture of a reasonable growth in this part of the world. So for example, the region is forecast to grow around 4.5% in 2020. This compares to just 2.5% world growth. So quite a respectable growth outlook, I would say.
We have monetary policy decisions out of Thailand and Bank Negara of Malaysia as well. What are we expecting?
We are expecting rate cuts on both of those fronts.
Really, even in Malaysia, when we have seen some fiscal budget support?
Yes, that's true, but they are pretty much limited in terms of what they can do from here in terms of fiscal support, given the overall deficit levels are looking much more worrisome compared to their peers in ASEAN, and they have focused on preemptive rate cuts so far. So I think, Although, as I said, the Fed has indicated a soft pause, they will take advantage of the dovish Fed and continue to, deliver preemptive cuts.
Right, Priyanka Kishore, thank you so much for that. Oxford Economics, head of India and Southeast Asia economics. Checking on Asian markets now, we are seeing Kiwi stocks gaining ground at the moment. They're up 0.7%. This after 3 sessions of losses. The ASX 200 also up 0.4%. We're seeing materials and tech leading the gains, and Kospi futures also pointing higher. Remember, we saw fresh record highs in U.S. stocks as well. U.S. futures at the moment up 0.2%, Heidi.
Yeah, looking like we'll continue to push those record highs when the US opens for the brand new trading week. Positive picture here in Asia. Well, coming up on the next hour of Daybreak Asia, Michael McCulloch of the US ASEAN Business Council will be with our very own Haslinda Amin live at the ASEAN Summit in Bangkok. This is Bloomberg. Very good morning. I'm Patty Stradwatts in Sydney. Korean markets are just open for trade.
Good evening from Bloomberg's global headquarters in New York. I'm Sherry Yan.
And I'm Sophie Kamarudin in Hong Kong. Welcome to Daybreak Asia.
Our top stories this Monday.
I think we're in good shape. We're making good progress, and there's no natural reason why it couldn't be.
A deal or no deal, Wilbur Ross tells Bloomberg a trade agreement is near. President Trump wants a signing to take place in the United States. ASEAN leaders gather in Bangkok. Malaysia says the group must speak with one voice about trade ties with the US and Europe.
The world's top oil company presses go on its long-awaited share sale. Saudi Aramco brushes off valuation concerns and says the price is right. Let's get straight to the market action with Sophie. Japan away for the long weekend. Sophie.
Yeah, so checking in on stocks in Sydney, building on Friday's gains, adding 0.33%. We're going to see if the benchmark can close above 6,700 after failing to do so last week. Now, resource and tech players are helping to boost the benchmark today, while financials are losing ground. NAB losing nearly 3% this morning ahead of its earnings on Tuesday. Now, we had a disappointing report card from Westpac this morning, adding to the pressure on Australian banks. An Aussie dollar could test 70, and Aussie yields rising ahead of retail sales due at the bottom of the hour. Now, checking in on what's going on in Seoul, the Kospi, we're seeing it gain ground this morning, up about 0.6%. This extending then gains for a third session, while the Korean won is on the back foot. Now, we're watching reaction as well to earnings, with several weak report cards from Korea Inc. and chipmakers are also in view. Heidi, TSMC has said the U.S. government has not asked the company to stop supplying Huawei, as reported by the FT. Heidi.
All right, let's get you the first word news now with Sue Keenan in New York. Sue.
Hey, thank you, Heidi. We're going to start with those valuation concerns on Saudi Aramco. The company may be worth $1.5 trillion or less, according to research sent to potential investors by the banks involved in the company's long-awaited IPO. Now, that valuation is well below the $2 trillion target initially set by the kingdom, and it suggests a struggle to pinpoint a precise valuation. Aramco says it will list on the Tadawul Stock Exchange in Riyadh and likely start trading next month.
It is very safe, and if you want to have foolproof to that, you see the oil prices. Oil prices went up the first 2 days by about 20%, then it came down by 10%, and all the future traders saw this as an honor event. This is fact. We have 1/8 of the oil production in the world, and the oil traders, they saw this as an honor event, and that means it is really safe. That's what the money is saying.
To Japan now, the governor of Okinawa is warning the U.S. to look elsewhere as the Pentagon hunts for sites to deploy new missiles. Denny Tamaki says any attempt to base new weapons would be firmly opposed by local residents. Tamaki was elected last year in a campaign to move the U.S. airbase out of the area. He says Okinawa carries an unfair burden by hosting half of the 50,000 U.S. military personnel stationed in Japan. Pollution in New Delhi, meanwhile, has worsened to levels that the government says should be treated as a public health emergency. The air quality index rose to 744 in some parts of the city over the weekend. That's according to the website Monitor Air Visual. 50 is seen as safe, and any reading above 300, again 700 plus as the reading, is regarded as hazardous. The toxicity is blamed on a range of factors, and they include construction dust, agricultural burning, and auto emissions. To the ECB now, the European Central Bank enters the Lagarde era, as it's being called, later on Monday. That's when the new president makes her first public policy address. Christine Lagarde will speak in Berlin at a time when ECB policymakers are split over stimulus plans, with the Eurozone economy teetering on the brink of recession. Analysts expect her to call on governments to do more to boost demand and to lift growth and low inflation. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan, this is Bloomberg.
And we're live at the ASEAN Summit in Bangkok, where delegates are discussing issues ranging from global trade to geopolitics. Top of the agenda, the U.S.-China trade war, as well as the fate of the Beijing-supported Regional Comprehensive Economic Partnership. Hazin Amin is at the summit for us. Haz, what are you hearing?
Well, we're kicking on the final day of the ASEAN meeting. As we speak, Sherry, ASEAN leaders are meeting with their counterparts from Japan, China, as well as South Korea, like you said, trade front and center. But don't forget as well, tensions in the South China Sea, that needs to be ironed out if ASEAN were to remain a pretty peaceful area, given that quite a few of its member nations are involved in the tensions in the South China Sea. But front and center is also relations with the U.S. Let's get an assessment with Michael Mahalak. He's the former ambassador, U.S. ambassador to Vietnam, also the regional managing director of the U.S. ASEAN Business Council. Michael, good to have you with us.
Thank you.
I mean, as far as ASEAN is concerned, this is 2 years now, 2 years in running where, President Donald Trump has failed to turn up at this meeting. It doesn't bode well for relations.
Well, it's very disappointing, quite frankly. I mean, every year his advisors tell him that he ought to go, he ought to go. Everybody knows the importance of ASEAN. We know how important it is to actually show up at these meetings.
and he has not done it. So I would agree, it's not a positive sign.
What does it mean going forward, especially now where Asian nations, including ASEAN member states, are on the verge of signing the RCEP deal, which is backed by China?
Well, the RCEP deal we think is very important, and we certainly back it and hope that it will get signed. But in terms of going forward for the United States, right now I think that this administration has got its mind on China. There is just a lot going on. We've got this Phase 1 deal, which is in the works. We'll wait and see whether that means anything when it's signed. He's also talking about doing something even more in more detail with Japan. And so those things are pretty much on his mind, not to mention the political issues that he has to deal with back in the U.S. So ASEAN seems to have been pushed off of his plate at this point.
And it may also mean that ASEAN nations will be turning more towards China. They could be more economically dependent on China going forward.
Well, you're right. I mean, to a certain extent, since China is showing up, China is here, they do have an awful lot that they want to talk about.
Represented by Li Keqiang himself.
Represented by Li Keqiang, that's right, that's right. And they certainly want to talk about Belt and Road. They want to talk about, as they have been, supporting the international trading system, even though in practice it may not work out exactly as much support as we thought it would be. So there is a lot going on there. We've got, of course, Wilbur Ross is here for the Secretary of Commerce. We do have the National Security Advisor, so there is some security discussions that can go forward at the EAS. But you're right, overall it just seems as though our engagement, which used to be extremely vibrant, especially with the TPP and with other types of trade agreements like that, is not going as smoothly as we would like.
You're talking about how the U.S. is preoccupied with the trade deal with China. Let's talk about that. The first phase, the Phase 1 of the trade deal on the verge of getting signed, but how significant is it? I mean, it's pretty much a done deal, but it doesn't take a look at things like intellectual property, for instance.
Well, I think we'll have to actually take a look at the language when it comes out, but the consensus that I'm hearing from various people is that it looks as though China is in fact going to buy some agricultural products, but on their terms. In other words, looking at the market, looking at what prices are, not in terms of trying to get back to anywhere near the levels of purchases that they had before the trade war started. And in terms of intellectual property, well, that's kind of been kicked down the road. I would expect that this time we'll probably get some nice words saying that we respect intellectual property, we think it's important, etc., but the deal has got to be done on enforcement. What happens if after they sign something like this, there is no follow-through on the part of the Chinese, which is what's happened so often in the past. We're right pretty much where every president has been with China whenever they begin the administration.
That will not stop President Trump from claiming victory.
Of course not. Of course not. This will end up being the greatest agreement that the United States has ever signed since the Declaration of Independence. But we're just going to have to wait and see what is the bottom line for American companies, what's the bottom line for the American public. The economy so far seems to be doing very well, but as we look further around the region and around the globe, in fact, the fact that our tariff wars and the overall attitude towards the free trading system is going down and is causing some problems and is causing what I guess we're now calling a synchronized slowdown around the world. And this hasn't led to recession yet, but everyone's afraid of it.
Phase 1 itself has been challenging.
No.
Phase 2 will be more complicated. I mean, the questions out there asking if the Phase 2 can be concluded before the end of Trump's first term.
Well, that's very good. You're absolutely right. And of course, everyone is wondering, is Xi Jinping just trying to stall until the election and hope for a better administration after that? We'll see. I mean, whoever is going to be the president of the United States, he's going to have to deal with China. He's going to have to deal with many of these issues that affect not only the United States, but the rest of the free world. And I certainly would hope that it would be much better to try and work with our allies to try and deal with this as a united front, rather than to try and do a one-off deal, the results of which we haven't seen yet.
Michael, you are the U.S. ambassador to Vietnam. The U.S. under the Trump administration has been singled out for its trade practices. I mean, how would you define relations between the two sides right now?
Well, on the trade front, I would say that there are some red flags that are going up because of the increase of the trade deficit. However, However, you've got to look at what they're really doing there. Yes, the trade deficit has gone up, but they're basically helping American companies who used to be sending American products back to the United States, and now they're complaining about that. But in terms of overall, in terms of security, in terms of overall economic development, I still believe that we have an excellent relationship with Vietnam. We're very much looking forward to next year when they handle ASEAN. ASEAN will be in Vietnam, and I think it's going to be plenty of ways in which we're going to be able to get over this deficit deal and move forward to continue to improve our relationship with
Will
Vietnam.
that be the case for the rest of the ASEAN member nations? We've already seen some resistance from the likes of Malaysia. Prime Minister Mahathir Mohamad came out to say, why not tit for tat? If the U.S. causes us pain, we can't cause the same amount of pain to the U.S.
Yes, I suppose that they could do that. But just because one person does something that's wrong doesn't mean that somebody else has to do something that's wrong. I mean, I think the idea of the WTO, the idea of multilateral trading system and a rules-based trading system are still worth preserving, and I think we just have to work harder on making that happen.
Just one final question before we let you go. ASEAN is increasingly saying that it needs to work together even more and perhaps explore all the other trading partners.
Totally.
What will that mean for the U.S.?
Well, it just means that we're not at the table. I mean, the whole idea of the CPTPP is moving forward. They're increasing market access for the members, and we're not at the table. The RCEP is going forward. It's not going to be a really high-level agreement, but it's going to be better than nothing, and it's going to have increased trade, and we're not at that table. People are starting to get together to talk about ASEAN coming together as a 650 million person market, and if we're not at the table, then we're just going to be missing out on potential deals. We're going to be missing out on potential agreements which would increase and improve the terms of trade. It just means that turning inward means you're not going to be part of the world anymore, and we will see what happens to that going forward. It's not going to be pretty.
And it's still a multilateral world. Michael, we have to live it there. Michael Mihalek, former U.S. ambassador to Vietnam, joining us here at the ASEAN Summit in Bangkok. Of course, it's the final day. And as I said earlier, as we speak, ASEAN leaders are meeting with their trading partners, the likes of China, South Korea, as well as Japan. Heidi.
All right, Haslinda Amin, thank you so much for that. We'll get more from Haz at the ASEAN Summit in Bangkok later today. She'll be speaking with the U.S. Chamber of Commerce's Charles Freeman. Well, still ahead, Aramco kicking off its IPO process, but the oil giant may not be worth as much as Riyadh hopes.
But up next, TSMC denies the Financial Times report the U.S. asked it to stop supplying chips to its second biggest customer, Huawei. This is Bloomberg.
Daybreak Asia, I'm Heidi Stroud-Watts in Sydney.
And I'm Sherrian in New York. Reports from Washington say the Trump administration has repeatedly asked Taiwan to stop leading chipmaker TSMC supplying semiconductors to Huawei. The Financial Times cites unidentified U.S. and Taiwanese officials for the story. However, TSMC has denied the report to Bloomberg. Our China correspondent Selena Wang is watching this. Selena, so what do we know?
Sherry, that's right. Our reporting coming out just now that TSMC says it's denying the report from the Financial Times that over the past year, U.S. officials have repeatedly pressured the Taiwanese government to get TSMC to stop selling its chips to Huawei. TSMC is the world's largest contract chip manufacturer. It makes chips for the world's largest technology companies in addition to U.S. defense contractors. Now, according to the FT, this is part of the broader effort from the U.S.'s part to stop any loopholes on its ban from certain chip makers from selling to Huawei. It's also part of its broader national security strategy. Now, the FT does cite an unidentified U.S. defense official who says that in this particular case, we have a partner that is under direct military threat from China and is also one of the few places that produce certain technology China needs to support its military ambitions. Now, Huawei, of course, has repeatedly denied its connections to the military. You also have a situation where it's unclear, even if it was pressured to stop selling chips to Huawei, that Taiwan would actually bend to U.S. demands, considering that many of the Trump administration's efforts to get other governments to stop using Huawei and 5G have not worked thus far. In addition to that, TSMC has actually received a boost from the Huawei ban. It's increased sales to China. It's increased sales since many of those U.S. companies no longer can sell to China.
Selena, what do we know about the status of the licenses that U.S. companies are asking for them to be able to sell to Huawei?
Heidi, there's actually been a lot of confusion from U.S. companies around what the status of these licenses are. We heard from Trump months ago that he was easily ready to approve many of these licenses from U.S. companies asking to be able to sell non-sensitive parts to Huawei. You also had Trump saying weeks later that he was going to expedite the approvals, but as of now, there have been no approvals granted. But Wilbur Ross's comments to Haslinda Amin does clear up some of that confusion. So take a listen to what he had to say here.
That's a lot of applications. It's frankly more than we would have thought. But remember, too, with entity lists, there's a presumption of denial. So the safe thing for these companies would be to assume denial, even though we will obviously approve quite a few of them.
Ross also said that the U.S. government has received about 260 applications to get that special license. One of the big arguments that the industry has been making in the U.S. is that this ban hurts the U.S. industry and it allows its competitors to increase their business, as I mentioned earlier with TSMC, since Huawei can just shift their purchases to other countries, whether that's Taiwan or South Korea or Japan.
All right, Selena, thank you so much for that. Selena Wang, our China correspondent there. Well, coming up next, 1 year out to the 2020 election, some economic models predict Trump is on course for re-election next year. We're discussing that next. This is Bloomberg.
Forex in Sydney. And I'm Chevryan in New York. Monday marks exactly 1 year to the 2020 U.S. election. Analysts say the main issue facing President Trump isn't Joe Biden or Elizabeth Warren or even impeachment, but the risk of recession, with several models predicting a second Trump term. Let's bring in senior international editor Jody Schneider. Jody, so tell us about these models.
Yeah, so Sherry, these models look just at the economy and how President Trump would do if the economy remains strong. And what they've done and what they've historically done, these models, is they compare what would happen if the economy in a strong sense would continue at election day 1 year from now. And given that, it shows that President Trump would decidedly win based on the fact that the growth remains strong, tariffs that we're seeing, and manufacturing being affected. Consumers have hung on to their spending patterns. So two of these models by Oxford Economics and Moody Analytics have historically been pretty accurate. They basically have predicted many of the popular votes. They've been wrong a little bit of the time, but based on this, they showed that President Trump would win. Now, of course, there's some other kinds of things that could happen, and yet President Trump does not have an opponent. So, of course, it's going on strictly economics against how he would do with this economy.
Are there any flaws that we should be aware of?
Yeah, well, first of all, it just only measures that. So the fact that there could be scandals, we obviously have this impeachment inquiry, things could happen on the world stage. So they're saying if these economic models hold true, then he would win. So there's other kinds of things. And also, he has to be given the credit for that economic growth. That's the other thing. So that if voters go to the polls thinking, well, the economy's strong, but I'm worried about what could happen with the economy going forward, for instance, the trade war, and he doesn't get the credit for it, that, of course, does not help him at the ballot box.
Jody, what about the impeachment? How does that potentially play into the re-election campaign?
Yeah, Heidi, it basically cuts both ways at this point. We've seen polls, including one from NBC, Wall Street Journal, and another from Fox, showing that 49% of voters in these surveys, in these polls, support impeachment and support the removal of President Trump from office. However, that is largely Democrats. One poll showed that 90% of Republicans don't support that. And there could be some blowback to Democrats as a result of this. Obviously, this impeachment inquiry, which at this point is not a vote on impeachment, it's an inquiry, although it may very well lead to that. They really are, at this point, politicizing things and dividing the parties. That was one of the reasons that Nancy Pelosi, the House Speaker, and other key Democrats were actually reluctant to go with impeachment, worried about possible effects it could have on Democrats. So it could cut both ways in the 2020 election.
All right, Jody Schneider there, our senior international editor. Let's get you a quick check of the latest business flash headlines this hour. McDonald's has fired CEO Steve Easterbrook for defying company policy by having a relationship with an employee. The board voted on the move after investigating the relationship and later promoted Chris Kempinski to president and CEO. The Wall Street Journal says Easterbrook sent an email to employees Sunday acknowledging what he called his mistake and agreeing with the board that, quote, it's time for me to move on.
Airbnb is banning so-called party houses and is clamping down on unauthorized raves at its rentals after a fatal Halloween night shooting in California. 5 people died in the incident, with police saying it took place in a home advertised on a short-term rental website. Airbnb says it will create what it calls a dedicated party house rapid response team and expand manual screening of high-risk reservations.
Australian mining tycoon Gina Rinehart is back in Bloomberg's top 10 of the world's richest women as her closely held Hancock prospecting company reported improved results on rising iron ore prices. Hancock revenue rose 39% in the year through June, with net profit climbing 90% to the equivalent of $1.8 billion. Rinehart's personal wealth has now risen to $17.9 billion. Well, coming up next, Aussie September retail sales data due to drop in just a few minutes. This is Bloomberg. just crossing the Bloomberg now, getting Australian retail sales numbers for the month of September, I should say. Retail sales for the month of September, month on month, missing expectations, grown by just 0.2%. We were looking at a gain of about 0.4%, and slowing from the previous month of August. Retail sales, excluding inflation adjusted, I should say, quarter on quarter, that number actually a contraction of 0.1%, missing expectations for gains of 0.3%. So really across the board, retail sales for Australia looking weak. This will be very keenly watched by the RBA ahead of their policy decision tomorrow. They're seen to stay on hold this week, but certainly this may add to expectations that we'll see further easing from the RBA, a little bit of pressure taken off, of course, by the Fed staying put. We're seeing that reaction from the Aussie dollar, which has seen some recent upside thanks to broad-based weakness in the US dollar, but certainly this large miss on retail sales really coming to that conclusion from the RBA that we're not seeing still demand side pick up when it comes to household spending following the recent rate cuts, the most recent one in October. Let's take a look at the market reaction in the Aussie. So,
well, Heidi, in the wake of that data release, we did see the Aussie dollar pair its earlier advance when it was at about 69.17, now at 69.07 cents right now. Earlier, a little change as well in the wake of that data. But broadly speaking, taking a look at the picture here in Asia, stocks rising for a third straight session with Japan offline. I want to highlight S&P E-minis as well, climbing to a record on trade optimism, bonds under pressure, Treasury futures just nudging lower, implying that U.S. yields will rise 1.5 basis points across the curve. Now, getting back to the Aussie retail sales print, that soft number adding to the RBA's conundrum as the subdued numbers could encourage more easing, as you noted, Heidi, but the central bank's trek towards lower interest rates, that is yet to boost consumer and business confidence, as the RBA's moves could be perceived as a sign that something is going wrong with the economy, not a gentle turning point, as RBA officials are opining. So households are holding back on spending despite rate cuts and tax rebates, choosing, for example, instead to pay down debt. Now, the RBA is expected to hold fire tomorrow, with markets seeing just a 6% chance of a 25 basis point cut, with jobs growth among the bright spots for the economy. And looking ahead, economists at the Big Four banks, Sherry, they're penciling in the next rate cut over in February. Sherry.
So, thank you so much for that. Let's now get the first four news with Sue Keenan. Sue.
All right, thank you, Sherry. We're going to start with President Trump. He is saying the potential phase 1 trade deal with China is close to being completed, and he wants it signed here in the U.S. Now, he has previously suggested Iowa as a venue for a deal, as it is the largest corn and hog producing state. Commerce Secretary William Ross has also hinted at Alaska and Hawaii, as well as various locations in China for the two sides to formalize any deal. Meanwhile, the Trump administration has eased tensions with Europe, saying tariffs on auto imports there may not be needed. Commerce Secretary Wilbur Ross welcomed what he termed good conversations and told Bloomberg that duties may not be needed. Back in May, the White House delayed tariffs on imported vehicles and auto parts. Washington has reached agreement with Japan, but is yet to clinch a deal with the EU. The U.S. and South Korea, meanwhile, will suspend a planned military drill for a second straight year. This to avoid raising tensions with North Korea while denuclearization talks continue. Yonhap News says the joint exercise, which is codenamed Vigilant Ace, is scheduled for December, and it involves hundreds of aircraft, including U.S. strategic bombers. Yonhap says that officials will be making a final decision later this month. And finally, in Hong Kong, at least 200 people were arrested over the weekend as pro-democracy protesters clashed again with police. On Saturday, police fired tear gas and deployed water cannons on demonstrators who had built barricades across streets. More unrest broke out Sunday when police and protesters clashed at shopping malls, and a pro-democracy district councilor was attacked. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan, this is Bloomberg.
Sue, thank you. Well, Saudi Aramco has finally kicked off its long-awaited IPO process. Regulators have approved the offering, with shares likely to start trading next month. This after Riyadh was said to be willing to accept a lower valuation to ensure the deal's success. Joining us now is our Asia energy reporter, Jim Thornhill, here in Sydney. Jim, just looking at the numbers, I mean, Bank of America, for one, the difference between the highs and lows is like $1 trillion.
Yeah, that's right, Heidi. I think that's possibly the most interesting thing about the story we had over the weekend, which is just sheer sort of variance in the level of those estimates. As you say, some are quite stark. In fact, if you're talking $1 trillion difference, that's actually more than the market cap of some large energy companies. I think it just speaks to the difficulty these banks are having in pinpointing a value on Aramco, because quite simply, the crude price is so volatile, and it's obviously the single most important input into the company. So it's just very hard to predict where that's going to go, and that's why they're struggling to put a number on it. I think what we can conclude is that the $2 trillion valuation that the Saudis were initially looking for was a little bit too high. These ones are generally coming in below. There are a few, there was one or two that are certainly above that $2 trillion level, but the consensus is coming in between the mid ones and the high ones, $1 trillion level that is. And that certainly, it seems to be confirmed by the reports we're getting that the Saudis will accept a valuation in the region of 1.6 to 1.8 trillion.
How much of it is also due to just structural issues like lower oil prices?
Yeah, I mean, I think that's a good point. That's the fundamental reason why they're struggling to put out a really accurate valuation, if you like. Very, very difficult thing to value when the price moves around so much. And of course, part of the problem the Saudis had was illustrated back in September, when we had those infamous drone strikes on facilities there, which caused such massive ructions in the oil market, which we're still sort of recovering from today. I mean, it's certainly been a defining feature of the market in the past few months, and arguably a reason why we haven't had the IPO up to now. I think it was planned to be earlier, but those attacks did sort of put back the timetable. What we're looking at now is sort of pricing early in December, and hopefully certainly the authorities in Riyadh will be hoping to get this listed on that Riyadh market around mid-December.
Jim Thornhill, thank you so much for that, our Asia energy reporter. Now, top Fed officials are hammering home Jerome Powell's signal that interest rates are on hold. That comes after another unexpectedly strong jobs report that saw employers add 128,000 positions in October. The data further validates the Fed's new message and underscores the continued consumer resilience. Fed Vice Chair Richard Clarida told Bloomberg exclusively that both monetary policy and the U.S. economy are in a good place.
We've characterized growth as moderate right now. The global economy's been slowing, and that's a factor. But the U.S. economy is very resilient, and these are good numbers. Both the GDP number and the labor market number surprised a bit on the upside, so that's a good thing.
Are those numbers, those GDP numbers, are they politically acceptable to this nation? It's great for economists like you to talk about 1.9% as a center tendency, but is that politically acceptable?
Well, I'm not going to get into the politics. Tom, our job at the Fed, we have a dual mandate, maximum employment price stability. We've made some adjustments in our policy rate. We think they are and will continue to give significant support to the economy, and we have a favorable outlook for the economy.
Well, let's talk about the outlook and the balance of risks around the outlook right now. How would you describe the balance of risk around that outlook, Rich?
Well, John, I would say for most of the year, the balance of risk had probably been tilted a little bit to the downside. Not so much because of the U.S., but we're part of the global economy. We've got a global slowdown. There are some pretty powerful global disinflationary pressures. And as we said in July, in September, and this week, we felt it was appropriate to make some adjustment in our policy to provide some insurance or cushion against really sort of a softening global economy. You saw that at the IMF a week or so ago, downgrading the global outlook. So we think the economy's in a good place. We think monetary policy is in a good place.
The balance of risk, though, still tilted to the downside?
I would say somewhat, yeah.
Looking at the economic assessment of the Federal Reserve Chairman, we're trying to understand what a material reassessment of the outlook would be to reach that benchmark for another move. Can you give us some clarity on that? What is a material reassessment of the outlook? How much data does one need to make that assessment?
Well, first of all, let's remember, what is the baseline outlook? The baseline outlook is for ongoing continued growth, a very solid labor market, and inflation near our objective. Obviously, if we saw accumulating evidence that we were missing on employment, we were missing on inflation, and we were missing on the growth needed to sustain full employment and price stability, then we would have to factor that in. We will be data dependent, but we're saying our baseline outlook now is policy's in a good place.
The next meeting's a live meeting?
Every meeting's a live meeting.
We're just trying to figure out what the next meeting actually is. Do you need a month of data to take another look at this? Do you need 3 months of data to take another look at this? How long does one need?
Well, Jonathan, we meet 8 times a year, and as we indicated, and as we did back in October, if we need to, we have had meetings in between. So yeah, we'll just take the data as it comes in.
All right, that was Fed Vice Chair Richard Clarida speaking there exclusively to Bloomberg. And don't forget, there is our interactive TV function, TV Go. There you can watch us live, catch up on past interviews, as well as dive into any of the securities or the Bloomberg functions we talk about. This is for Bloomberg subscribers only. Do check it out. It's at TV Go. This is Bloomberg. in New York. And I'm Patty Stroud-Watts in Sydney. Well, Alibaba reported a 40% surge in revenue, showing Chinese consumers continue to look online for bargains as the domestic economy slows. Joining us now from Hong Kong is Moody's Investor Service Senior Credit Officer Lena Chua. Lena, great to have you with us. Let me begin by throwing up this chart on the Bloomberg terminal that illustrates how competitive Alibaba is when it comes to top-line growth compared to cohorts the likes of Tencent, JD.com being the major Chinese competitor there. It's still growing at a much faster clip. Reading through your notes, so do you expect this to slow? Do you expect margins to come under pressure? And if so, why?
Sure. Indeed, the revenue growth for Alibaba has been very robust, despite that the rest of the sector has been showing some of the top line slowdown. And those are driven for Alibaba by two key factors. It's not just only the increase of their active users online on their platform, it's also the deepening engagement of these users from more parts, deeper penetration into different provinces and levels of counties within China that enable the company to continue generate very strong cash flow. We do expect this kind of solid revenue growth to continue for Alibaba, at least for the rest of the coming 12 to 18 months or for the fiscal year. And we do expect that they continue to generate cash flow in excess of $20 billion for the coming fiscal year.
Right. In terms of how much of a benefit, I guess, we'll get from the alleviation of some of these macro issues or geopolitical issues, do you think that given we are starting to see maybe at least a bottoming out of the economic picture in China, and perhaps we'll see that phase one trade deal being signed between the US and China as well, do you think there'll be any sort of upside for a company like Alibaba, or is it so domestically focused that these are not factors that will really play in?
Yeah, what we have baked into our forecast for Alibaba, like you said and correctly pointed out, that all these internet companies, Alibaba included, is not that directly exposed to trade tensions between US and China in the first place. So because most of their revenue is generated within China, there's only a small portion of external revenue on the trade platform. So from an upside perspective, we have not factored in much upside. What we have do try to incorporate in our estimates, though, is if trade tension were to continue and if to escalate, all these internet platforms may be indirectly impacted if consumer confidence continue to decline.
Lena, investors, analysts are the most bullish on this stock in about 4 years, as this GTV chart on the Bloomberg shows. Although I have to ask, though, how is the likelihood of more competition, especially coming from, say, Pinduoduo or Meituan-Dianping, going to affect Alibaba in the future?
Actually, we have already seen as a sector online, more competition in the online sector for all the internet platforms are feeling the impact. Less so on the top line growth front, but more so on the margin side. What we have seen in the last 12 to 18 months is for all large internet platforms to see a gradual decline in profitability in the EBITDA margins. And that's partially due to heightened competition, and also partially due to, in order to penetrate deeper into the lower tier cities and counties of China, where the consumers may want different things, and you may need to invest first to get to the service, logistic services, for example, networks of delivery, for example. Those kind of investments need to go ahead of time before you can reap the rewards of additional consumers doing more things, using their services more. So in that respect, we have seen a margin decline over the last 12 to 18 months, and we do continue that for the sector as a whole in the coming year or so.
Lena, of course, we're also going to hear from Baidu this week. We have seen the company being pressured from newsfeed and short video platforms. What are you expecting?
For 2019, Baidu is like what I just mentioned about the need to invest into growth initiatives. For Baidu specifically, it's probably the AI-related initiatives and also its online video project on iQIYI. You know, those investments that has gone in front in the early stage that have not been able to generate return in terms of cash flow yet. Those will be dragging this company's margins in the next little while. But from a rating perspective, though, we try to rate through the cycle, and we view this as temporary and need to invest into the future growth drivers rather than structural changes.
Lena, it's interesting, one of the most popular pair trade strategies we've seen trading in Hong Kong has been to go long Alibaba and short Tencent, and you would have done quite handsomely if that was a strategy that you'd employed, given that Tencent fell to a 9-month low in October. When it comes to that company, is the worst over, given that we aren't seeing the sort of massive amount of gaming growth in China, but approvals have started up again? So do you think the outlook for Tencent is looking better?
Our rating on Tencent is at A1 and the outlook is stable. So what's incorporated in our rating outlook is we do expect the company to continue maintain a very solid financial profile and generate stable cash flow. Now, in the last 12 to 18 months, because of some regulatory events and temporary regulatory licensing on some of the games, this company's cash flow has seen a little bit of volatility. But what we have baked into and what we expect in the coming year or so is indeed things will stabilize for Tencent.
That was Lina Choi. Thank you so much for that. Moody's Investor Services Corporate Finance Group Senior Credit Officer. And coming up next, McDonald's CEO Steve Easterbrook was abruptly fired due to a relationship with an employee. Can the fast food giant be able to continue his plans to revive sales despite the shakeup? This is Bloomberg. Daybreak Asia, I'm Chevrillon in New York.
And I'm Heidi Stroud-Watts in Sydney. A quick check of the latest business flash headlines. Berkshire Hathaway has enjoyed its best quarter ever, with operating profit topping a record and net income rising to $52 billion. That makes it the most profitable listed company in the world, with $128 billion in cash. Berkshire has wide interests, from energy and insurance to car dealerships and jewelry. However, Class A shares are up about 6% this year. That's well short of the 22% gain in the S&P 500.
Reports say federal officials are looking into accounting practices at Under Armour and whether the company manipulated the numbers to appear healthier. Dow Jones says the inquiry is focused on whether Under Armour shifted sales from quarter to quarter, with the Justice Department and SEC questioning people in the past few days. There's been no comment yet from neither the company or investigation team.
The US has launched a national security review of the popular music video app TikTok, according to sources close to the investigation. TikTok is owned by a Beijing-based ByteDance and is one of the most downloaded apps in the US, making it one of the few Chinese internet companies to succeed there. US lawmakers have called TikTok, quote, a potential counterintelligence threat that cannot be ignored.
McDonald's has fired CEO Steve Easterbrook for defying company policy by having a relationship with an employee. The board approved the decision after investigating the relationship and promoted Chris Kempczinski to president and CEO. Bloomberg's Dave McCombs joins us from Tokyo. Dave, so how big of a loss is this for McDonald's?
Pretty big. You know, he was the key architect of digital ordering and delivery. Those were key areas of growth for the company and very important. You know, he implemented a system where executives got bonus based on the speed and breadth of the rollout of those services. So it was seen as very key for the company. It remains to be seen whether his replacement will be able to keep the ball rolling on those key areas for the company to keep up with competition. You know, the fast food sector is changed a lot, and he's been at the forefront of those changes. So he's been very good for the company, and we just don't know yet whether the successor will be able to keep that going.
Yeah, in thinking about those issues, how are investors likely to respond?
Well, investors, you know, the company had been on a roll. There are only a handful of other companies that have outperformed it since he took over in 2015. in terms of companies on the S&P 500. So investors have rewarded the company already. There could be some small upside to this, and it does show that the company's taking its policies very serious. McDonald's has faced an array of lawsuits and challenges on its harassment policy, so it's very focused on this, and the idea that it would be willing to have its top leader resign over something like this shows that it is taking it very seriously. So it could be that investors would actually welcome this, even though he is, as I mentioned, a key architect. They could consider that it's a good example of governance and how the company has moved forward, given that it is under pressure from other quarters to have a harassment policy that's effective and, of course, to be consistent in its application.
All right, Dave, thank you so much for that. Dave McCombs there in Tokyo. Let's get you a preview of what to watch in markets later on this morning. So,
well, taking a look at what Hong Kong investors have to consider plenty after the economy fell into recession, and Friday's retail sales data showed a continued slump, albeit at a softer pace, sliding 18.3% in September compared to the 22.9% drop that we saw in August. But Bloomberg Economics warns there is little reason to expect a bottoming out as consumption is likely to weaken further. And with that, I also highlight what's going on with the market reaction, as that has been tempered. We're seeing that even with a string of poor economic indicators, markets are remaining calm, with the cost of hedging against more losses on the Hang Seng staying subdued, along with volatility for the index. Now, when it comes to stocks to watch today, Budweiser Asia in view after Morgan Stanley initiated coverage at overweight with a 35 Hong Kong dollar price target. We're also watching China Fosun, which is to buy Thomas Cook for $14 million. And I want to quickly highlight CICC's call that the MSCI China Index may rise as much as 12% in 2020, thanks to the potential earnings growth and anticipated valuation recovery. Now, CICC is overweight autos, healthcare, F&B, consumer, as well as tech. Heidi.
All right, Sophie Cameron in there in Hong Kong. Well, before we hand it over to Bloomberg Markets Asia, ahead of the China Open, let's take a look at how the markets that open in Asia are trading at the moment. This is how we're seeing the Kospi trading upside at about 1%, I should say, really tracking the gains we saw on Wall Street overnight. The S&P 500 hitting a fresh record high. Japan will have to play catch up tomorrow. They're closed for culture day. We're seeing Aussie stocks up by 0.4% ahead of the RBA decision this week. Retail sales coming in much worse than expected. And trading New Zealand also seeing gains of just over 0.5%, Sherry.
Let's check in on futures as well. U.S. futures gaining ground, up 0.1%. This after U.S. markets rose to fresh highs. We had energy leading the gains in the past session, as we had oil jumping the most in 6 weeks. WTI and Brent at the moment under a little bit of pressure. Take a look at China A50 futures, up 0.5%. This, of course, after those better than expected Chinese Caixin manufacturing data we got last week. Right, and that's it from Daybreak Asia. Stand by for Bloomberg Markets, the China Open. This is Bloomberg.
smile on your face.
All the diseases have been taken. I'll take a tax.
It is 9 a.m. in Beijing, Shanghai and Singapore. Welcome to Bloomberg Markets China Open. I'm Tom McKenzie.
And I'm Yvonne Mann. We're counting down the open of trade on Hong Kong and mainland markets.
And I'm David Ingles. Let's get to your top stories.
I think we're in good shape. We're making good progress, and there's no natural reason why it couldn't be.
Wilbur Ross tells Bloomberg a trade agreement with China is near. President Trump wants the signing to take place in the United States.
The world's top oil company presses go on its long-awaited share sale. Saudi Aramco brushes off valuation concerns and says the price is right.
And vandalism, arrests, and increasing gloom. Continuing street protests hit Hong Kong's economy as recession strengthens its grip. So is this a Goldilocks moment for stocks, and if so, how long does it last? The Fed has cut, the non-farm payrolls were better than expected, and of course, the mood music on the trade talks continues to be positive, David.
Yeah, a bit of trivia for you guys and for you, Tom, as well. Also, Yvonne, Asian stocks have only closed lower 3 times in the last 17, 18 days. So yes, Goldilocks moment, perfect example there, Tom.
Yeah, and you gotta wonder if this phase 1, if in fact it is coming here, has it already been priced into the markets? Do we need more of a comprehensive deal in order for these risk rallies to continue? But nevertheless, today, as you mentioned, we are seeing this kind of good mix of good news here that really is making Asian stocks punch higher here on this Monday morning. We're watching Singapore very closely here because we just broke above that 200-day moving average. The central bank last week saying it looks like the economy is showing signs of bottoming out. So things are looking right when it comes to Singapore stocks here. We're watching U.S. futures as well, also ticking higher after we saw the S&P punch those fresh records on Friday after that better than expected jobs report. And we're watching China 850 futures. A lot of foreign buying coming back into these markets here after we saw foreign investors buying the most mainland stocks in 8 weeks ahead of that MSCI semi-annual review on Friday. And a stronger RMB certainly helping when it comes to Asia FX. We are seeing the Aussie dollar pretty much flat here today after that weaker retail sales print earlier this morning, but we are seeing strength across Asia FX. Taiwan dollar we're watching very closely here. We actually have seen it here, the 5-week rally, the longest in nearly 2 years for the Taiwanese currency, and we're watching the South Korean rand here today as well. Not just because of that Rugby World Cup win, but more so about what Moody's did. They did not downgrade the country's credit rating to junk, keeping that investment grade status here. So we are seeing a bit of a relief rally when it comes to the currency, and we're watching it, of course, when it comes to bonds. Yeah, we are seeing Japan close here today for Culture Day, but we see bond futures continue a little bit of that mini sell-off here today. We did see the U.S. 10-year break back above 1.7%, and we are seeing that move up in yields, similar in Australia as well. Crude, we're seeing a little bit of weakness here today, but we did see when it comes to Brent rising the most in 6 weeks on this trade optimism, and gold seeing a little bit of a bid here today. Let's get to the first word news. We got Sue Keenan in New York. Sue.
All right, thank you, Yvonne. Well, at least 200 people were arrested in Hong Kong this weekend as pro-democracy protesters clashed with police once again. On Saturday, police fired tear gas and deployed water cannons on demonstrators who had built barricades across the streets. More unrest broke out again on Sunday when police and protesters clashed at shopping malls, and a pro-democracy district councilor was attacked. To the valuation question on Saudi Aramco, the oil company may be worth $1.5 trillion or even less than that, according to research sent to potential investors by the banks now involved in the company's long-awaited IPO. Now, that valuation is well below the $2 trillion target initially set by the kingdom. It suggests a struggle to pinpoint a precise value. Aramco says it'll list on the Tadawul exchange in Riyadh and will likely start trading next month.
It is very safe.
Fala, galera!
Footproof to that, you see the oil prices. Oil prices went up the first 2 days by about 20%. Then it came down by 10%, and all the future traders saw this as an honor.
Eu falei pra vocês que o aí ó, Dow Jones ia subir.
1/8 in the world. And the oil traders, they saw this as
E o ouro ia cair aí, ó.
it is really safe. That's what the money is saying.
Now to the European Central Bank. It officially enters the Lagarde era later Monday when the new president makes her first policy or public policy address. Christine Lagarde will speak in Berlin at a time when ECB policymakers are
Aí, galera, quem quiser vender o ouro,
with the Eurozone economy teetering on the brink of recession. Analysts expect her to call on governments to do more to boost demand and to lift growth and low inflation. Global News 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts and more than 2,500 CPAs.
ó, desde a abertura, né? Ele abriu aqui, ó. Eu falei que era venda e não andou aí, ó. Veio para baixo. E o Dow era compra, né? Olha aqui, ó. Onde que ele fechou. Aí o Dow fechou aqui, ó. Cadê? Aqui, ó. Aí o ouro abriu, ó. Já abriu caindo, né? Falei, ó. Na abertura é venda, ó. Só tá em queda. Aí quem não entrou ainda tem venda bem aí, ó. Ou aqui nessa média de 21. Ou aqui, ó. Foi a abertura de hoje aí, ó. O 15,12,75. Aí o Dow abriu, ó. Aí eu falei, é compra. Lá onde que ele bateu? Lá em cima, ó. Rapidinho. Ele vai embora, ó. Que a abertura foi aqui, ó. O diário dele tá aqui, ó. Ele já tá aí no diário, ó. Quem não entrou, entra aí na compra. E o ouro tem venda aqui, ó. Que é o... Que é a abertura aqui desse dia. Vou até dar uma olhadinha aqui no petróleo para ver como é que tá o petróleo, porque ei.
Speaking of licenses, the special licenses for Huawei suppliers based in the US, which are not dealing with security-linked components.
Galera, o alvo desse ouro aí é 14,91 na queda dele, pode ir até mais, tá? E o Dow é topo histórico aí, vai subir aí. Ó, o alvo do Dow é no 27,420. Não, PC Moto.
Alright, just in case you didn't know, that was Commerce Secretary, U.S. Commerce Secretary Wilbur Ross speaking with our husband exclusively. Now, Haj will be speaking as well with Charles Freeman, a top Asia executive for the U.S. Chamber of Commerce.
Yeah, plan to look ahead to over in Bangkok. Let's have some more analysis from Yifan Hu, Regional CIO and Chief China Economist at UBS Global Wealth Management. Yifan, always great to have you. Just want to throw out the question of the day here today, because it seems like as what Wilbur Ross had mentioned, this phase one is coming. Is phase one enough? It seems like right now that's still kind of
Vai ser itu.
Is it enough to keep this risk rally going?
In our view, as long as the talk continues, as long as there's a hope for any terms of the deals, I think it's positive for the market sentiment.
Does it help growth though?
Not necessarily. Like I think the immediately impact on the growth, but at least I think that there's a positive sentiment. I think especially for the investment. Currently, because of this trade uncertainties, actually dragged down the global investment, especially for this kind of capital intensive and also for some countries like small open economies that is all like largely affected. So as long as the talk continues and there's some positive deals comes out, I think it's positive.
But there's still a lot of unresolved issues. This phase two, we're not even sure if it's going to happen right now. And even if we get these kind of, oh, I'm going to buy some more agricultural products from the U.S., these are still things that perhaps China needs. They haven't really said anything about buying things that maybe China doesn't need at the moment. Does that make Chinese stocks at least vulnerable to reaching a bit of a cap now?
I think that this deal could be not as large as expected. So I think that now currently we know relatively clear is that China agrees to purchase the agriculture goods. And the China actually this year already cut the agriculture goods purchase. And this time they just...
Até mais, galera.
So it's not like I think no too much of...
Galera, o ouro vai cair aí, vai derreter, tá? Se vocês quiserem aguardar aí. Aí o stop de vocês, pessoal, tem que ser aqui no 14,15, tá? Porque se ele romper aqui, ó, o que pode acontecer? Por conta do spread aí, ó. Ó, tá vendo que ele tá descendo? Então tem que ser aqui no 14,15. Tem que ser o stop. Porque aqui no topo, ó, se você verificar aqui, ó, tem um topo aqui, não tem? Ó, bem aqui, ó. Esse topo é 15,14. Aí se por acaso ele vier aqui, aí tem um tal do spread. O spread deve bater mais ou menos por aqui, ó. 15,14,70 por aqui. Aí o stop tem que estar no 15,15. Aqui, ó. Porque senão ele pode pegar seu stop e cair. Aí faz uma venda aí na abertura do dia de hoje. Deixa uma venda lá e faz lá. E aí segue a operação. Galera, o alvo aí do ouro é aqui para baixo, tá? O alvo do ouro é aqui nessa região aqui, ó. Nesse enrosco aqui, ó. Então eu tô saindo aqui, ó, no 14,92. Pode vir até mais, ó. Pode vir para 8,3, 8,7, 8,8, tá? Mas aqui é a saída, ó. Ele deve derreter aqui, ó. Deve derreter bonito. E o Dow, cara, o Dow ele vai espocar aí. O Dow você pode projetar a altura dessa barra aqui de hoje, ó. Ó.
Anyway, the China's market is not that sensitive to the interest anyway. But for China, for the PBOC, we already see it's aggressively cut the RR, the requirement ratio rates actually this year quite aggressively. And we also expect another 50 to 100 BP like to the year end.
I'm curious, and the more was out with it known
Tá? Ele pode chegar a vir aí em 27,640 de hoje para amanhã. Depois que abrir Dow Jones, né? Abriu o Dow Jones 10, vai ser às 11h30, né? Porque ele abriu aqui, ó. vendo? Tá vendo esse candlezinho aqui pequeno? Então eu peguei esse candle maior aqui, ó, porque vai ser um candle de impulsão aqui, ó. Então a gente usa ele aqui e projeta esse tamanho aqui para cá, ó. Mesmo sendo essa abertura aqui que ele deve subir até aí, seria o alvo final aí. Mas ele pode bater aqui no 500, ó. 492, 490, bater aqui e cair. Então aqui seria o nosso primeiro alvo, caso ele rompa aí vai buscar lá. Então nossa saída vai ser aí 490. Tá? Aí o stop tem que ser bem aqui, ó. Justamente na mínima desse candle aqui. E aí deixa o pau torar aí pra cima aí. E agora o ouro, cara, o ouro ele vai vir, cara. No mínimo ele vai vir aqui para essa região, ó, do 1504, e se perder o 1504, aí ele vem aqui pro 92, 91. Beleza? Como é que tá o petróleo aqui? O petróleo tá bonito. É isso aí, galera. Pessoal, vou me despedindo aí de vocês. Um abraço aí para vocês, tudo de bom. Tá? Continue a operação na venda do ouro e na compra do Dow. Beleza? E a gente se vê amanhã, pela manhã. Tá? Às 8h40 nós entramos na sala. E às 10 horas aí no YouTube. Beleza? E aí a gente vai dando os pontos aí do ouro e do Dow. Tá? Ó, a gente chegou a vir aqui, ó. Um 10. Já tá voltando, ó. Aí tem venda aí, tá, pessoal? Pode vender bem aí, ó. Se ele voltar aqui no 15,12. Aí, ó. Voltar aqui para vender. Bem aí. Olha o down aí. Esticando. Isso, William, pode ficar tranquilo que executa. Tá? Você não precisa ficar com o computador ligado não. Beleza? Olha o down subindo aí, ó. Falei pra você que vai subir, cara. Aí, ó. Eu não acho que vai cair, né, cara? Pela alta que ele já teve aí, todo mundo não vai corrigir, não corrige não. Não tem isso não. Ele vai chegar um momento que ele vai parar de subir. Porque ele vai formar um preço em outro lugar. Mas cair difícil. Só se tiver uma notícia muito ruim no mercado mundial. Aí o Dow vem para baixo. Aí já sabe, né, pessoal? Amanhã, mini índice vai estourar aí. E o dólar vai depender muito do cidadão. Como que vai estar, né, ele. Mas ele provavelmente ele não vai cair, mas ele também, cara, assim, ele também não vai ficar esticado não. Ele vai ficar um pouco volátil amanhã, o dólar. Ele pode cair um pouco, mas depois deve voltar. É o que ele está fazendo, né? Ou ele sobe e depois volta. Tipo assim, abriu, né? Aí ele vai e cai, balança. Cai tipo 30, 40 pontos da abertura. Aí depois ele chega mais ou menos lá para as 2 horas, 3 horas da tarde, ele começa a voltar. Aí volta tudo de novo e tipo assim, fecha próximo à abertura. Não fica aquele saldo negativo grande, sabe? Ou positivo grande. Aí se for o contrário, aí sobe logo na abertura, aí depois cai. Vai ficar, semana que vem ele deve ficar muito tempo assim. Ele não vai fazer novos preços em outras regiões longas, não. Ele vai ficar muito tempo consolidado naquelas regiões lá. Beleza, pessoal? Galera, eu vou nessa aí. Bom descanso para todos. A gente se vê amanhã cedo aí no mini índice, no mini dólar. Valeu? Muito obrigado pela atenção de todos aí, tá? Apesar de eu não ter ficado com vocês aí esse período aí que eu tenho um compromisso, todo mundo sabe que eu tenho um compromisso aí à noite, dia de domingo. Mas a gente tenta deixar aí para vocês aí um pouco aí das nossas orientações, tá? E aí amanhã, segunda-feira à noite, a gente pega firme aí de novo aí é direto, tá bom? Lembrando, tá, pessoal, mudou aí o horário, acabou o horário de inverno lá nos Estados Unidos. Agora Nova York vai abrir nosso horário às 11h30, tá? E o Forex aqui vai abrir agora às 20 horas. Beleza? Um abraço, pessoal, tudo de bom, boa noite para vocês, Deus abençoe cada um de vocês. Valeu! Muito obrigado pela atenção. Tchau, tchau!